All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Welcome in, everybody. Let me know if you guys can hear the stream okay, if you guys can see everything okay. Hopefully everything's okay. I got a new computer here today, so trying to make sure everything is worked out here. But let me know, is everything okay for you guys? Let's see here. Check this out. And welcome in, everybody. Welcome in. Let's see. Pito, Quiles 1100. Welcome in. John Thurgay, Steel and Stone, The Normal Swede. Samuel S., welcome in, man. Thank you so much for being here. Thank you for modding. John Shanks, welcome in. Peter Van Loman, welcome in as well. And guys, we are here. Bitcoin is continuing to dump. We did dump down to our local golden pocket or our more macro golden pocket the other day, yesterday, and we are seeing a small bounce from that golden pocket. Now, I do want to say we have invalidated, like this little arrow says here, we have invalidated our local impulse to the downside, showing this as a 1-2-1-2, this being a third wave here. If we were looking for 4 5s, we did not want to hit this golden pocket here at 86,000 or $88,000. And we have now hit that golden pocket there, invalidating that impulse to the downside locally, but that doesn't mean the overall larger impulse has been invalidated. So if I zoom out onto the daily time frame, the impulse that I'm talking about, the bigger impulse from the all-time high, and we've been covering this on the channel for quite a while, but it's this bigger 1-2-1-2, our big third wave here. We could still be in a fourth wave complex correction in the bearish backtest of our Fibonacci channel before overall making new lows, seeing a fifth wave come into the downside, taking out our 80.5K lows, and then seeing another corrective move, because since we have 2 1-2s, we are also going to need 2 4 5s in here. And we could come down with our overall target being to take out our 74.5K lows and potentially even come down to 70K. So that is something that is still the highest probability to me. Like I said last week in last Thursday's stream, the highest probability to me until we can reclaim our Fibonacci channel here, which we are rejecting multiple times from, until we can reclaim that Fibonacci channel or reclaim the value area low of our big 2025 range, then I do think the highest probability is to continue down to make new lows in this impulsive price action to the downside. And if we look at this chart here, this is the Binance chart. This is the scenario that we've been watching actually on this channel for months, where we completed our 5-wave impulse to the upside on the higher time frames, on our weekly time frame, daily time frame. That is your bull market impulse. We ended that impulse because we broke market structure bearishly on the weekly, and then we came for a flat correction in here. And the target of your C wave flat correction is to take out the lows of A. That is what I'm going to be watching. And you can see very nicely here with this impulse down potentially not being complete, coming down to our pitchfork band of support, taking out those lows at 74.5K. It is lining very nicely to potentially see massive swing long area from taking out those lows. A lot of people will be getting in fear if we start to lose those range lows in there, and that would be a really good opportunity for us to potentially go swing long. If we look at our volume profile, our 2025 macro volume profile, so this is all of the price action within the range of 2025. Let me just pull this all the way. Yeah, I guess we're hovering right around the value area low of the range. So it is nice that we were seeing some sort of acceptance back inside of the range over the past couple of weeks. We were able to break back up inside that range, find acceptance back inside of that range. And what's going to be key is we want to close our weekly candle this week, another weekly candle above the value area low, around 86.9 or 87K. And if we can close that, we might be able to see even this kind of complex correction that we're seeing in here continue for a little bit longer. It might be a continuation here, or even if it even goes sideways here and we kind of chop around here. But overall, because our market structure on the macro time frame is bearish, and remember, market structure is king. We're waiting for some sort of sign of market structure break here on our higher time frames, making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. And so maybe now we're going to see lower lows come in here. If we zoom in more locally from that dump on Friday, the 21st, November 21st. We are in local bullish market structure that was broken this last week. And so that is also another sign that the overall momentum on higher time frames is bearish, making lower lows and lower highs. We were in a local uptrend. Now that local uptrend has been broken for this week, and we are now losing that local uptrend. But we are still making higher lows on the chart. And if you guys watched my video yesterday, I am looking at some local support levels below. I mean, we do have that swing failure pattern right into our 786 Fibonacci. So if we pull our Fibonacci from the 80.5K lows up to our 94.6K highs, and oops, let me grab this. Where'd that go? There we go. And we look at our 786 here. That 786 Fibonacci is going to be right below that liquidity. And for me, that is a pretty nice level. Anytime you see a liquidity grab into a key Fibonacci level, if we start to lose our local golden pocket that we're at now, so let me go ahead and put that golden pocket on there as well. If we start to lose the local golden pocket that we're bouncing from now, a lot of people are going to get super bearish that Bitcoin's instantly going to nuke down. And that might not be the case. We might continue to range for a little bit. We might be able to, bounce from this area. Even if we bounce from that area just to back test this value area low and then continue down, this might be a nice scalp long position for us. And remember, if we're playing it as a scalp, we play it as a scalp. So you want to take profit at local resistances. Don't get greedy with your trades here. But we're still in an overall kind of ranging corrective pattern here, a ranging corrective structure. And to me, this does look more bearish, does look like we are going to continue. The highest probability is to continue down to take out our 80.5K lows. But in the meantime, we can just trade this range. We can trade this range until it breaks, either to the upside or to the downside. And what we want to do is we want to be positioning ourselves within this range. When we're near the highs of the range, we want to be looking for shorts. And when we're near the lows of the range, we want to be looking for longs. Or near key support levels, we can look for longs. Set your risk management properly and also set those stop losses, because if you're wrong and this thing starts to break either way, it could be a very volatile move and we could get trapped there. So you want to make sure you are setting your take profits, setting your stop losses there, and just playing whatever comes. So let me go ahead and jump back into the chat here real quick. Say hi to everyone. Thank you guys all for joining. You guys, I'm really sorry about Friday. I had every intention to stream, was going to stream. My GPU in my computer died and my computer wasn't even shutting on. It kept shorting out and cutting off. It took me all day to figure out what was going on, and I just got a new computer, so just didn't want to deal with all the crap there. It messed up the motherboard a little bit with the shorts. So here we are now. Sorry about Friday, guys, and we're back. I'm still working on getting the stream completely set up and reorganized the way I had it with the music and with everything like that. But thank you guys for joining. Thank you guys for your patience with me. Appreciate y'all for being here. Glasshopper, thank you so much for joining the Telegram, man, and welcome in. And Envision 10, welcome in as well. Let's see, BSG, what's up, man? Welcome in. Yeah, 56K. You think we're going down to 56K? Okay. I think that we could be potentially starting a bear market, guys. The bear market might be started, and this impulse down, the bigger daily impulse down, might be the first impulse of a much, much larger impulse. But remember, in our bullish scenario, actually, let me go ahead and zoom out onto our weekly time frame. And I'm going to go to our larger Binance chart here. But on our entire bull market here, this structure to the upside was pretty much our impulse for the bull market. And in a super cycle scenario, I'm just saying, like, if there is going to be a super cycle scenario play, like the Fed starts printing money, we get an injection of liquidity and all assets start to raise again. We know risk on assets will be very impacted from that in probably a positive way. And of course, a lot of that money is going to flow into Bitcoin, into the crypto sector. That bullish super cycle is, we had this bullish impulse to the upside that lasted 2-3 years. We have our flat correction in here, and the flat correction, remember, if we look at our trend-based Fibonacci time, so where's that out? Trend-based Fibonacci time, and we just go from the start of the impulse to the end of the impulse, and we look between your minimum target for that corrective move is the 382. So we've now surpassed the 382, and actually, I believe the low of the move was made exactly on that 382 Fibonacci. If we, let me clean a little bit of this up here. Yeah, the low of that move was made on that 382 Fibonacci. So 80.5K, you generally want to make it after the 382 though. Not I mean I guess we would have to zoom in here. Let's zoom in onto the daily time frame. Yeah, so it was made after the 382. And now our minimum time target for that entire impulse to the upside has been met. So technically, as far as time goes, we have satisfied the minimum target for a corrective move of a major impulse. This corrective move is 38.2% the amount of time that it took for the impulse. But generally, your corrective moves, especially in larger corrections, they generally will take a little bit longer, sometimes even the 1-to-1 Fibonacci. Now, we know with Bitcoin, it runs in a 4-year cycle, 3 years of bullish price action with about a year of a bear market. And looking at this 0.5 Fibonacci and even really the 618 is what I'm really looking at. We might continue in a downtrend until May. And usually May is a sell in May and walk away type event. But in a super cycle, we want to see this flat correction play out here. And remember, the targets of this flat correction is to take out your A wave lows, your 74.5K lows. After taking out those lows, we could start up another entire huge impulse to the upside. It could be another, I don't think it's going to be as aggressive as this impulse here, but we could start another huge impulse to the upside, potentially, coming up 200, 300K in the next couple of years here. And that is still the bullish scenario. But even in that bullish scenario, we know locally we have some more downside for our targets to be met for this correction. Now, in a bearish scenario, if we start to lose 70K for me, guys, 70K is going to be such an important support level for us. And if we start to lose 70K, it's really, really not going to look good for the bulls. And that could mean that prolonged bear market. I also have to say, we know that we've looked at this many, many times on the streams, on the channel here, but on the weekly time frame, we do have those topping signals. And I'm talking about bull market top signals where we have 3 higher highs in the price action. We have the lower highs in the momentum waves and our money flow. We even have money flow bear divs here with money flow about to cross over into the red on the weekly. And even within this year of 2025, we have the 4 higher highs here. We have the bearish divergences on NAMI. We also have the scary money flow bear divs here, money flow bear divs. So we have that dual signal that I really look for as a really good hit rate for our confirmations of potential like reversals. And I use these confirmations for trade entries a lot on the lower time frames, but on the higher time frames, we could say, hey, maybe this is going to mean our bullish sentiment that has been occurring over the past couple of years is about to transition to a bigger bearish sentiment. And if that's the case, 70K is going to be a very important support. If we start to lose 70K, not only, well, first of all, if we start to lose 74.5K, we're going to be breaking market structure bearishly on like the monthly time frame. And that means that we could come down into the low 50s. And 56K is a pretty good level. I'm looking around 55K. We have a key weekly level down there at 55K. And by the time we get down there, let's say we, chop around in this pitchfork band for a bit and then dump down, it's going to be the bottom of our pitchfork. And this pitchfork, multi-cycle pitchfork, has been really, really highly respected for this entire bull market. You can see how well it's been respected. Rejecting the bottom part of the lower band, kind of had this flat correction in here, came up to the midline for your 2024 all-time high. Rejected the midline, your 2024 all-time high, came all the way back down to backtest that lower band. Once we backtested it, we made an attempt to get above that midline. That is where we saw that distribution range occur in January, February, distributed down. And then after seeing this push down the last few months, we attempted multiple times. And once again, guys, this is that 3 tap that I talk about. Let me zoom in here onto the 2-day chart. But with this midline here of this multi-cycle pitchfork, and remember, this is pulled from very, very key swing lows and swing highs of Bitcoin's life cycle in the past 5-6 years, including the COVID lows. So, we had our first tap and our first try to break the midline. We got that nice 3-wave corrective move here. I think it was like a $8,000-$10,000 corrective move. And then we made an attempt. We broke above it, but we created that distribution range above here, or failed auction. Let's just say like a failed auction. And we couldn't maintain it and flip it to support. So we break back down, kind of all of this kind of was a failed auction range trying to break above that pitchfork midline. Drop back down. We broke market structure bearishly. and took out, your range lows here at 112K, let's say, and then you had this sort of three-wave corrective flat move where you come up to take out the highs of your range, take that liquidity right into your pitchfork midline, and as soon as you take that liquidity into your very key resistance, also within your flat targets between the 382 and the 1.382 and the 1.236, you start to dump here. So oftentimes on these more macro structures, and this pitchfork is a more macro trend structure, looking at the overall bull market trend, the three taps, the tap one, the tap two in a failed auction, the tap three, and then after the third tap, you start to dump here. Now, we have not quite made it down to our next major support level of this pitchfork, which the last time we rejected from the midline, we did grind our way down to backtest that pitchfork lower band. So, it's likely to me that this bearish momentum to the downside continues here, and we continue. Maybe we're going to roll over right now, or maybe we're going to kind of make a bigger sideways correction in here before breaking down. But I think the overall bearish momentum is going to continue. I mean, if we look at the 2-day time frame, money flow is still leaving pretty aggressively. And here's what's more important, guys. We are setting up for some really nice high time frame bull divs. Look at this 2-day time frame. So first of all, on the 2-day time frame, we want to see a lower low in the price action, and we want to see a higher low in the momentum waves. That is going to confirm the bullish divergences. And we also want to see that money flow bottoming out and really starting to kind of climb up, curve back up here. And the 2-day time frame is setting up, if we can take out our 80.5K lows, we have our 78K support level, 78 to 77K. And then really the key target is we kind of want to take out these 74.5 lows. But we could set up for some really nice bull divs here. Even if we came down and did a liquidity grab of this low with 2-day bull divs, money flow bottoming out and starting to come up, that could be really, really nice for a swing long position. So we are setting up for some potential bullish swing longs, but not quite yet. In order to get those bull divs to confirm, we want to take out those 80.5K lows. Another thing, those 80.5K lows, we bounced at 80.5K, and I'm sure there was some like low time frame order blocks in here, maybe a fair value gap, but there wasn't any major support in that area. And generally with these bull markets, like even when we bounced from our 74K lows, it was a major pitchfork support level. We were looking at that and all these levels. So there was no major level in here to bounce from. Yeah, we bounced from it. We're kind of in the process of backtesting our anchored VWAPs, our value area low, and our Fibonacci channel. But for me, that wasn't a area where you would expect to put in a major swing low. And so that's one of the reasons why I'm looking to kind of roll over here. Another thing, guys, if we look at this, I just showed you guys on this pitchfork that 3-tap rejection of a midline or a macro resistance structure, macro resistance trend. If we go to that Fibonacci channel and we look, kind of zoom in here, we got the same thing with the backtest of the Fibonacci channel. The 3 taps and the third taps, then you start to reject here. Oftentimes, if you can't break that resistance and you start to lose market structure, which we have now, broken it bearishly by breaking these lows at 87.7, that is your sign that you could continue to roll over here and make new lows. Okay, let me check the chat here. Welcome in, everybody. Thank you guys so much for being here with me. All right. Yeah, Peter, welcome in. Chad P, welcome in as well. Swivs Rush V1, Hot Tamale. Thank you guys all for being here. Okay, let's see. Everything's good, loud and clear. Okay, thank you guys. Good to see. Yeah, Mind Tapestry, welcome in as well, and it's good to see you. Thank you in advance for the tape. Absolutely, guys. I'm glad to be back. I'm sorry about Friday. We're back. We're here. We're streaming, and Bitcoin is starting to move here. And I suspect, guys, that this range that we're in is getting close to ending. This since the 80.5K lows, we've kind of been in this sideways range. It's now starting to get a little bit more mature here, and I do think that it's getting close to ending. We could be seeing kind of a break of this range soon. Hey, bro, I got a question. If I join your Telegram, what do I get? Do you publish your trades in real-time? Blessings. So G3, S9, In the Telegram group, it's free to sign up. So all you have to do to sign up is you have to join BYDFI using my affiliate link in the description. And then once you've done that, you deposit $100 into the exchange. Once you've deposited $100 into the exchange, then you go into the Telegram link in the description of this video and click the link. Once you're in the link, you're going to type in /verify and then your user ID from BYDFI, and that'll automatically put you into that Telegram group. In that Telegram group, throughout the day, I'll kind of post my thoughts and analysis on the markets. I also do post some trade setups. Now, guys, I know I've been not posting many trade setups here lately. I'll let you guys, sometimes I let you guys know after. I'm going to start getting better at publishing that before I enter so you guys can look at what I'm looking at. And yeah, so I will post trade setups in there. I'll post analysis. There's also a general tab where you can click in that general thread and you can tag me and ask me questions. Like if you have a question about Bitcoin or some of the altcoins or just, market structure, anything like that in general about, some of my TA that I show on the streams. And once you're in the Telegram, you're in. So I hope that helps answer the questions for you. But to me, it's a win-win, guys. You get 20% discounts on trading fees if you sign up using my affiliate link for BYDFI. You can earn a 50% deposit bonus. If you deposit $100, you can get 50% deposit bonus. And you can earn up to 40% trading discounts off the trading discounts off trading, excuse me. If you deposit some of the larger amounts, they're also offering up to $8,100 in futures trading bonuses. So for me, it's a win-win because you're going to be giving BYDFI those trading fees anyways. And all this is this partnership with BYDFI for me is if you guys use my affiliate link to join, they're not paying me like a monthly salary or monthly income or anything like that. I just get a percentage of the trading fees that you would already be giving to BYDFI in the first place or to any exchange. All exchanges have trading fees. So yeah, guys, to me, it's a win-win. I want to make this accessible to everyone. That's why we did $100. I'm pretty sure if you're trading any sort of asset, you at least have $100. If $100 is a lot for you to trade, then I don't want to discourage you from learning and trading, but maybe start learning. You can always build. Let's just say this. If you can't turn $10 into $100, you can't turn $100 into $1,000, you can't turn $1,000 into $10,000. You have to learn the process of becoming profitable. And at first, you want to look at the percentage gain, not necessarily how much money you're making per day. So that's kind of what this channel is about also as well. Education, trying to show you guys how to build profitable income over time with trading. As a trader, our goal is to scrape money from the market every day. A good goal is 1% a day over the 5 trading days or the week, the week that the regular traditional markets are open. And 5% a week, I think, is good. And you can slowly build that portfolio up. It's not a get-rich-quick scheme. Trading is not a get-rich-quick scheme. There's a heavy learning curve to it. And you just need to be patient and disciplined and learn. But once you start getting some momentum, guys, like here's the cool thing about trading is, first of all, we don't have to know what Bitcoin's going to do. Like we don't know, some people come in here, oh, is Bitcoin going to dump? Is it going to pump? We don't know. What we know is the key levels to watch out for, key supports, key resistances, key support levels. And then we can develop plans for whatever Bitcoin does. We're prepared for either plan. If it's going to come to the upside, come to our resistance, and we see confirmations on the chart here, we can look for a short from here, knowing that it's a decent probability that it will dump from that resistance area. If it comes to the bottom, it comes to a support level, and we see our confirmations on the chart, some bull divs on the chart, we can long it, and we can play both sides. That's a cool thing about derivatives trading, futures trading. You can make money both ways, and our goal as traders is to just map out those key areas and trade whatever comes. Be prepared for whatever comes with good risk management. And then you build your portfolio over time. At first, you're going to be using a lot of time, energy, effort into learning, into all this, and it's like a exponential growth curve. Say you start out with $100 account, you're making 1% of $100 every day. It's nothing. And after a couple of years, you keep compounding those profits back into that portfolio. It's growing slowly and slowly. There gets to a point, this kind of point right here, where all of a sudden 1% of $10,000 a day. Okay, that's pretty good. You know what? And then you compound that back in. And all of a sudden, your 1% trades get a whole lot more and more and more, to the point where now you're really living and creating wealth off of this portfolio, building this portfolio, because it's an exponential growth curve, compound interest. Einstein talked about compound interest being the 8th wonder of the world. So as a trader, and of course, it's not all going to be straight up. You're going to have some losses in there, but you want your overall trend to kind of be up and to the right here. So yes, I hope that helps, guys. I hope that helps. Really, we want to be looking at the proper habits as a trader. Okay, let me get back to the chat here. 5 minute symmetrical triangle. Yeah, let's get into Bitcoin, guys. Guys, the reason there's not a whole lot to talk about for Bitcoin. So we're still in this range here. We're still in the sideways range. We could pull our volume profile of this range, just going from the end of this impulsive move down. Clearly, this move from 107.5K down to 80.5K, that was an impulsive move to the downside. Now, after that impulsive move ends, we're in a corrective structure here of this looks like a larger wave 4 of our multiple 1-2 impulse here. Oops, that's not 107.5. Here's 107.5 down to 80.5. That's your big impulse to the downside. Very clear impulse to the downside. Very clear increase in volume on that dump to the downside. You can see as we're dumping, volume is increasing. To me, that's not even a question that this was impulse down. So after that impulse finishes, you're looking for a corrective move. And so far, it does look like we're in a complex correction, a potential double zigzag here before rolling over. But while we're in this corrective move, these corrective moves often tend to be ranges. And you can just play the range until it breaks, hedging yourself both ways. So whatever way it breaks, you're in a position where you can be profitable here. So, of course, yesterday we came down to our golden pocket. We are bouncing from the golden pocket. We have reclaimed the value area low of our range over the past month. This is about, November 21st, coming up on about a month now. And above us, we do have of course, our key higher time frame value area low around 89. Actually, let me see. That's actually around 87. Let's zoom out to the 4-hour chart. Yeah, we're above. So the value area low of our 2025 macro range is the same as the value area low of our more local range at that like 87K area. But we're back inside this volume profile. So we saw a little bit of a deviation into our golden pocket support, and now we're back inside of it. Also, at the beginning of the stream, I talked about how we invalidated this as a local double 1-2 impulse. This little structure down here we were looking at this being a 1-2 1-2 with all of this being a third wave. But if we're looking at that and you pull your Fibonacci from the highs of wave 3 up to the lows of wave 3, hitting that golden pocket, and actually, hold on here. Let me zoom in onto the 1-hour time frame. Yeah, actually, I guess we have not hit that golden pocket yet. Okay, I was mistaken. Where was I pulling that golden pocket from? I'm sorry, guys. I totally messed that up. Let me correct the record here and ignore what that thumbnail said. I'm sorry. I've been really busy today messing with computers, trying to get new, software set up, all this stuff like that. But if we're looking at this from this rejection of 94.6, we're looking at a double 1-2 impulse in here, 1-2 and 2 retraced, to that 886 level. And then we're looking at another 1-2 because we came up to that golden pocket. So you can't classify this as a third wave. And then we see all of this could be counted as a 3. You have your 1, 2, 3 flat and a 4, a big kind of extended flat over the weekend and a 4. And then you have your 5 here. And then now we're in a small fourth wave corrective move. So if we're looking at this as a potential correction before continuing to bleed down, and remember taking out overall a bigger fifth wave to the downside to make new lows below 80.5, then what we want to be looking at is our fourth wave corrective targets. And generally those fourth waves are between the 382 and the 0.5. Those fourth wave targets, most common, between the 382 and the 0.5 Fibonacci. So for me, I would say this, what is that, 80, 89. Let's zoom out to the 4 hours so we can get a better look at that, because our actual value area low of our macro range is down here. And actually, I'm going to turn that off so we stop getting that confused when we zoom in here. We want to, between 88.3 and 89.3, let's say 89,350, 88,350-ish. That is going to be our general area where we could see a rejection to roll over, to continue pushing down here. And even coming down locally, we're now going to be looking for, since we had 2 1-2s in here, we're also going to be looking for 2 4 5 4 5s in here as well. Um, Local structure still does. I mean, we didn't have bull divs. If we were coming into this golden pocket, and this is our macro golden pocket of this corrective move from the range lows up to your range highs. So as you're coming down to this golden pocket, you would expect to see at least some 4-hour bull divs. Now, Nami did confirm the bull divs on that low, and we would expect to see some nice divs on the chart, and we would want to see some nice money flow curving to the upside, which we now are seeing money flow curve to the upside. Nami's money flow is also starting to curve to the upside here, and we are getting a decent bounce. Actually, what we can do is we can even go in and we can look at our order flow. Check out our order flow here to see. Let me zoom out to the 15-minute chart. And as we are pushing up today, making that low yesterday, in this push up, yeah, geez, it's a very messy order flow, but you can see what's happening here is really since the lows of yesterday, a lot of positions are closing out. Now, some of those positions closing out are late short positions. We had a lot of people shorting, the breakdown of 87K because 87K was a naked daily point of control and a daily level. A lot of people were attempting longs in that area. Once we broke that, you can see the CVD is kind of rising in this area, but because your open interest is dropping, that means those are short positions that are getting stopped out. And they were the short positions that were kind of entering in here. You could see we have some shorts entering, some shorts entering in here, shorts entering. So I would say this whole corrective move from yesterday's low is a mess, though. We really don't have any clarity as far as our CVD divergences go. No clarity in here. Earlier today, we were making higher highs in the price action, lower lows in the CVD. We were making some nice bullish CVD divergences, but it was on a kind of flat open interest or a dump in open interest, and you don't really want to see that. You want to see your open interest rising because true absorption, you have to have new positions to absorb. So what I would say right now is there's a lot of indecisiveness in the market and actually in the economy in general. The debt markets are going crazy. The private debt markets are really reeling right now. And of course, with Bitcoin and crypto being a risk on asset, it is going to be affected by bearish sentiment in the overall macro economy. But I would say this range here, to me so far, it doesn't look too impulsive to the upside yet. We want to start to see some volume come in here. And now, yeah, at the end, we did see a little bit of volume, but remember, taking out highs, they end on a lot of volume. That could be a corrective move. So let's zoom in here. 15-minute chart. And you said a 5-minute symmetrical triangle. Okay, we'll look at that. I think I see what you're talking about. Kind of this guy in here. 5-minute triangle that's starting to form. Yeah, but we already have 15-minute bear divs, guys. Now, we haven't made it up to the 382 yet. So it's possible that we do come up to 88, like 88.4 or so, and take that liquidity. But you can see here, we are already making higher highs in the price action, lower highs in the momentum waves, confirmed bear divs on NAMI and Market Cipher B. But your money flow still looks pretty good here. And remember, bullish money flow will always overpower a single drive of bear divs. So yes, we have a single drive of bear divs now. What would be even nicer is if we could break up, hit into this 382, create another drive of bear divs, and hopefully by then your money flow on the 15-minute is starting to come out here. And that could give us a really nice scalp short opportunity breaking down to take out the lows from yesterday and potentially coming down to grab that liquidity at 83,800 into our 786, which rests around 83,600. Okay, let me check this chat here. I know I'm so far behind on the chat. Dr. Rex, thank you for that comment, man. I appreciate that. Thank you for being here for the stream. I appreciate all you guys, man. You guys are so nice, so upbeat. I love that. I love how upbeat this community is and how everyone treats each other. So thank you for that. What's the red horizontal line? The POC. Yes, that is the POC, Peter. This red horizontal line on the 15-minute. So this is the POC of our range that we've been in for about the past month. That's coming in around 90.2, 90.3. Now, remember, in yesterday's video, or I think it was yesterday's video, I talked about a naked weekly point of control there. So we did confirm a fresh naked weekly point of control at 90.2K. that is going to be our range point of control. It's going to be a naked weekly point of control. And I believe there was okay, wait, the daily was up here. So that is going to definitely be a volume level of resistance. It's also our weekend highs. It would be a swing failure pattern of our weekend highs. Kind of, I mean, these are Saturday highs, so just above it. But that general area could be an area where we could also just come up to grab out your weekend highs, stop out that liquidity, and continue down. Now, for me, that would be somewhat of a break bullish market structure, though. If we come up even breaking, like these highs here, that would be a break in bullish market structure, a bullish break in market structure by coming up to that area. And of course, if we look at our golden pocket, it is going to be at that POC as well. Now, that would invalidate the local double 1-2 impulse from 94.6. This guy down here, this impulsive move down here, if we come up here, it would invalidate that. We would have to rework the Elliott count on this structure, saying now it's most likely a completed corrective structure. And even if we reject from this golden pocket, we might be able to get a higher low and can kind of start the reversal of the uptrend. So we're going to have to be paying attention. This next couple of days here is going to be very interesting for Bitcoin, because if we do start to reject, just, important levels to watch locally here. Obviously, the 382 and the 0.5. Those are your targets for your wave 4 correction. Now, your invalidation is going to be right around that 90.2, 90.3. It doesn't mean that we won't reject from that area still, though, guys. If we hit it and we invalidate the impulse to the downside, sure, we could come up here, hit it, invalidating that this is not an incomplete impulse. We could say now, it's most likely to be a completed corrective structure. And now we are about to maybe start an impulse to the upside. This could all be a wave 1. We could get a retrace to your golden pocket 786 area before it's starting to push up and maybe come take out your highs at 94.6. So we'll just keep an eye on it. Do we know what's going to happen? No. Do we have to know what's going to happen? No. We just need to know the scenarios, and we need to watch for the key levels, watch for key invalidations. Also look at your confirmations. If we're coming up here, if we're grinding up here kind of with low volume, creating bearish divergences on the chart. Let's turn on our volume here. Volume, yeah, actually, this is a nice spike in volume that we're seeing right now here. The scary thing is that could be a kind of a flat correction in here, a 3-wave flat correction that ends, oftentimes those corrective moves end on a spike in volume. And then if we start to roll over here and you start to see volume increasing, then we most likely know that not only are we going to come take out these lows, but we're probably going to continue down to take out your 80.5K lows with some bounces along the way. It's not going to go straight there. We're probably going to see some sort of price action from here, some sort of bounce. Okay, let me catch up in the chat, guys. I know I am behind. Okay. We can also rotate to 94K. Yes, we absolutely can rotate to 94K, because we are bouncing from a higher low golden pocket here. And this is really kind of your key support level to bounce from. I would actually say the 786 is a little bit more important because of the liquidity that's resting below there. And remember, liquidity and volume are the two things that move the market the most. We have some very key liquidity resting below these lows, because look at how much long stepped in this area here. If we actually go to our chart here, our order flow chart, let's zoom out to the 4-hour chart. And as we were hitting into this low, we did see a lot of long stepping in within the start of this impulse to the upside. Now, yes, a lot of those have already been wiped out, especially all the this imbalance here. All those imbalances within that area have already been wiped out because we've obviously broken below that area. But there is still some stops. Anyone that longed in the beginning of this impulse in here, their technical stops would go below this low because they're waiting for their idea to play out and continue pushing to the upside. So guarantee you that people still have their stops below this low. If we come down, we stop those out, we might be able to make a push up and just continue the sideways range, guys. I mean, this sideways range could continue for even another couple of weeks, in my opinion. It wouldn't be too crazy to say a couple more weeks within that sideways range. Time Attack, welcome in, man. Yeah, guys, please hit the like button for me. If you get anything out of this video, please hit the like button. Any sort of insight into the market or you learn anything from this video, please hit the like button for me. Please subscribe to the channel. Remember, we do have the Telegram channel. If you guys are interested in joining, all you have to do is sign up with BYDFI using my affiliate link in the description and then deposit $100 into that account. That $100 is your money to trade with. You'll get the discounts on the trading fees, and you will get deposit bonuses of a 50% deposit bonus on that $100. You can also earn up to $8,100 in futures trading bonuses. Okay, let me get back to this chat. Is there account for a move to 97K to 107K followed by the dump below 80K? Well, okay, so on the higher time frames, the highest probability still is to continue down before making it up to 97K. But here's the thing. We could be in a much more complex corrective structure. Let me just clean up this chart a second here. The overall impulse from the all-time high down, we're looking at a double 1-2 impulse in here. Let me turn off these naked weekly points of controls. All right. So what we're looking at is, this 1-2, 1-2. This is your third wave. Your fourth wave, remember, your targets for the fourth wave are between the 382 and the 0.5 Fibonacci. So if we pull that Fibonacci from the highs of wave 3 to the lows of wave 3, your invalidation is if you hit 97,184 on Coinbase. If you hit this level, that is going to invalidate. This is an incomplete impulse to the downside that still has more lows to come in here. And it could mean that not only, yes, we could make it up to 97K, but after rejecting from that, we might make a higher low and then really start to push up here. Seeing kind of those 1-2s, this would be our bullish scenario. The multiple 1-2, a 1-2, 1-2, 1-2, 3, 4, 5, 4, 5, 4, 5. And that could be your really bullish impulsive structure if 80.5K was the low. But the higher probability, especially because if we take this Fibonacci and we turn on our wave 4 targets, look at where we rejected, right at that 0.5 Fibonacci, which was also a key bearish backtest of our Fibonacci channel. And so for me, it is almost confirming that this was all a wave 4 and we're about to dump down to make wave 5. So can we go to 97K? Sure, we can. Locally, we still have kind of been in bullish market structure, making higher highs, higher lows, higher highs, higher lows, higher highs. But this last week, breaking below this low here is kind of a bearish break in market structure. And that is kind of actually what we're testing right now. So oftentimes when you're in a range like this or a ascending channel, let me just say an ascending channel. I think I actually have that on the chart still. Yes. So see this ascending channel we were trading in. We were kind of chopping within this ascending channel. You'll break it down. You'll bounce from a local support level. Then you'll come back test that area as resistance. So we could back test it. If we reject, you expect to make new lows and probably take out the liquidity of the entire channel. But I've talked about this a lot on my streams. When you have a channel structure like this, a trend, all a channel is a trend. And remember, there's a lot of algorithmic trading in crypto, algo and bots that trades. So you oftentimes will form channels. When you break a channel to the downside, you will bounce from a local support. You'll back test that, but you'll often, when you break a channel, you'll at least sweep the liquidity of the second pivot of that channel, if not the entire liquidity trail of the channel, which would be the lows at 80.5K. We have not come down and swept the second pivot of the channel yet, which would be right into our local support. So even if we come up here first, reject, and then come down here, sweep that liquidity, you could continue now then to push up to take out your range highs again, maybe another back test of your Fibonacci channel before ultimately breaking this down. We don't know what's going to happen. That's the thing. We can kind of give a bias on it. And is it possible? Absolutely, it's possible. As long as we don't lose this 786, like if we come down here and we see a failed liquidity grab, we're going to go straight for the lows. We're probably going to go straight for the lows and most likely to this support between 78.3 and 77.3, where we have not only time frame supports, but volume support as well. So very nice support level below us, more macro support level. But for now, what we can be looking at is we've broken the channel down, and from our 94K, 94.6K highs, this here is still not been invalidated as an impulse. So we want to see this. We want to focus on this structure. Until this structure is invalidated, our higher, our bias should be for lower targets because we are seeing this breakdown. Also, I mean, you can also, this is what indicators can be great for momentum in these oscillators. Money flow doesn't look the best on some of these time frames, and I believe it was on the daily time frame. Let me zoom out to the daily. Yeah, the daily time frame yesterday was starting to roll over on the money flow. I guess it looks okay right now on that daily time frame. But we also don't have confirmed bull divs until we take out that low at 80.5K, which would be really nice to see. If we come down quickly in this impulse, take out 80.5K, maybe come down to our 78K support, lower lows in the price action, higher lows in your momentum waves, that would give us some nice bull divs here. Okay. Welcome. What's up? How do you pull a pitchfork? So pitchforks are pulled from key pivot points in the market, key swing highs, key swing lows. And it just depends on if you're using a bullish pitchfork or a bearish pitchfork. But for example, on this pitchfork here, this pitchfork was pulled from, it helps to know a little bit about Elliott wave theory. But if we were looking at that 5-wave impulse to the upside, wave 1, wave 2, wave 3, wave 4, wave 5, I pulled it from the lows of wave 3 to the highs of wave 3 to the lows of wave 3 and of wave 4, excuse me. And that is going to give you kind of your trend on where you can expect the 5th wave to end. And look at exactly, you know, we pulled this, we had this pulled months before we came up to the top of this. And actually, as I was making my YouTube channel last November, December, we were coming up here and I was telling everyone I'm looking at selling some Bitcoin and looking for a major drop because we also knew that it could be the end of a more macro impulse, a 5th wave of a macro impulse. I got so much crap for that, but sure enough, we did dump, you know, what, 20, 30% or so. But you're pulling it from key swing lows to swing highs. Now, if it's a bullish or if it's a bearish pitchfork, let's say we're about to start a bigger downtrend here, you know, some big downtrend in here. You're going to want to pull it from a high to a low to a lower high, and then you could look at your pitchfork in here. It could give you your kind of key ranges within this, what to look for within this price action here. So it just depends on what you're looking at. And of course, there's many different kinds of pitchforks. We can get more into that later. I don't want to get super deep into that right now, but depending on how intense your trend is here, you can use an original pitchfork, you can use a skiff pitchfork, you can use a modified, or you can use an inside. So, you know, original is too high. You know, that's too much of a steep curve. This is something you'd be looking for on a 3rd wave impulse, not a 5th wave. Okay. What's up, Todd? Welcome in. Mickey, what's up? Welcome in. Red Elephant as well. Good to see you, Red Elephant. I DM you on Discord. Okay, yes, Diamond Whale. I will look on Discord. I will look for your DM there. And Crypto Clown World, welcome in, man. Good to see you in here as well. Is there a count for moved? Okay, I think I just did that. Would really be interesting if you have time. Okay, so is there a count for a move to 97K, 107K, followed by a dump below 80K? So a move to 97K first, followed by a dump to 80K. All right. Well, so far the primary count is this double 1-2 impulse down being not completed. Now, if we move up to 97 first, remember that would be your golden pocket. Let me get back to the Coinbase chart. That would be your golden pocket of your wave 3 to the downside. So your wave 3 is from 107.5 down to 80.5. If we move up to 97 first, you're going to invalidate all of this as a bearish impulse down, or it's not. Yeah, it would invalidate a double 1-2 impulse down. We would have to say then that this is complete, and that we might, you know, we're going to make a bigger move up. But then after making another lower high, sure, you could make another lower low. We would have to be looking at that as a more complex corrective structure, because this really does look like a big double 1-2 impulse that's about to finish to the downside. It's the highest probability. But if we did come up here, invalidate this first, or maybe even move a little bit higher. So if we hit 97.2 to 98K, I do think we can make a higher low before coming up and hitting our more macro golden pocket. And that golden pocket would be pulled from the all-time high to your 80.5K lows, coming up to this general area between 108 and 110 before then overall dumping back down. But yeah, that could just be market structure. Lower low, lower high, lower low, lower high, lower low, and continuing the overall downtrend in a bear market. Okay, okay, can we take a look at Nat Gas? Yes, Mind Tapestry, we will take a look at Nat Gas. Let's just give that a quick look right now. Was this the one we were looking at? This is not the chart we were looking at. Here we go. All right. We're coming down to our support level. You know, that was the support level we were looking at, that golden pocket and a naked weekly point of control here. Yeah, so here's the big thing though. We did reject from the large range. We tried to break out of that large range value area high. We took the liquidity up at the highs here, and now we're dumping. This also looks like a three-wave corrective move up here. Actually, let's look at this. Let me get rid of this real quick because that is the low, not this guy. All right, let's pull from the lows to the highs here. And if we hit this golden pocket, you see this golden pocket right here at 374.2. Let me get rid of this one so you don't get confused there. If we hit this golden pocket between 374 and 366, it could invalidate impulsive structure. We could be looking at this as a double 1-2 in here. You know, 1-2, 1-2. This is all your third wave. Then you want to see a 4-5-4-5 kind of ending in a wedge here. And if you hit that golden pocket of wave 3, so from the lows of 3 to the highs of 3, which is almost about to hit, it has not technically hit it yet, then that would invalidate that as an impulse to the upside. And honestly, I'd be looking at the more macro golden pocket then. Pulled from the lows, this golden pocket here, pulled from the lows to the highs. Let me zoom in here real quick and we'll... Why am I doing this? Okay, there we go. I'm going to delete this naked weekly point of control because we're hitting into that today. And yeah, I mean... Ooh. This looks very impulsive to me. Let's turn on our volume here. Let's look at the volume. Actually, wow, that is so interesting. So overall in this dump, volume is decreasing. That is actually good to see. Meaning it's likely that we make a higher low before at least starting a sideways range in here or putting in a higher high. If I remember on natural gas, it does tend to be very trending. It's trending up for a while, then it will trend down. You know, the thing I don't like is this failed break of these highs. You pretty much grab liquidity in a sharp move down. You generally, in a wave 4, you generally don't see a sharp, big move down like this. So that's the one thing that's concerning me about that. But so far, you haven't invalidated the impulse yet. Let's turn on our wave 4 targets. Yeah, this would have been the area to hold. You really wanted to hold $4, that like 408 to 403, because this was your big support level for an impulse. It was your point of control of your major range. It was also some local liquidity, and it was your 0.5 Fibonacci. So we lost that. That's not a good sign for me. And unfortunately, we might be able to say that we're seeing a bigger flat structure. Just like Bitcoin, we could be seeing a bigger flat structure in here before continuing the impulsive price action. So oftentimes at tops, you'll see a flat within a major topping area. And in that case, you do expect to come all the way down to take out your lows at what is that, 264-ish, 260, 265. But locally, I would just play this range. You have a big sideways range that's kind of developed in here. Play this range until it breaks. So here's the thing as far as volume profile trading goes. We tried to break out of the point of the value area high of the range. You can see resistance, flipped POC to support, and we attempted the breakout. But we just broke out to take liquidity, and then we flushed sharply back inside of the volume profile, meaning that this was a fake out of the volume profile just to grab liquidity. Now we are back inside that volume profile, actually losing our fair value, the point of control, which is considered fair value. We're below it. So now we have the highest likelihood. Yes, we probably will see some sort of bounce before then, but on that bounce, you're going to be bearishly backtesting your fair value. If you reject there, you expect to fill that volume profile to the value area low. So for me, the highest probability, now that we had a fake out of the volume profile, the value area high, we're back inside of it and we're below the POC, the highest likelihood is to continue to value area low, which also happens to be a very important golden pocket and a naked weekly point of control and a naked daily point of control. So that 334 to like 333 is the best support level below. And it's, to me, it's likely that we do hit it. Now, the question is, do we come straight down there? Probably not. We're probably going to bounce from a golden pocket or a naked point of control. And then we're going to back test your POC before working your way down there. So the bearish backtest of your POC at $4.11 could be a good short to bring down to 337 to 333. That general area, golden pocket, naked daily point of control, value area low. I mean, on the lower time frames too, even though the volume's decreasing on this, you don't see any sign of strength here. There's really no sign of strength within this area. We've lost our very local golden pocket. We've lost that very local golden pocket. So because we've lost that local golden pocket, unless you can reclaim it really quickly, you're likely to continue dumping here. And, you know, even if we see a small bounce from the 786, which we are coming in, you know, haven't quite come into yet, but yeah, so I would expect this to kind of continue dropping a little bit here. We can look at our new volume profiles. Interesting. Well, this was naked until today. That was also where that naked weekly point of control was. So even though that's still showing there, I don't know why it's still showing there. That has been tapped now. Okay. So yeah, I say the highest likelihood overall is to come down to this green box between like 337 and 333. And yes, your 618 is at 344, but there's much more confluence below that around the 0.65, right on top of your naked daily point of control. And then your value area low is right below it. So I would say this zone of support down here is really, you're probably going to bounce before a little bit, back test, and then come down there. But that's the highest likelihood for me. And that'll take time. That's not going to happen might not happen, you know, this week. It might happen next week. So just, yeah, that's what I would say about that. Can you check Trump Coin? He's going to speak on Wednesday. Maybe we can anticipate a pump and dump. Yes, Peter, I'll check Trump Coin. Let me go through the chat a little bit more, try to get caught up, and then we'll start going through some of the altcoins, guys. This sideways range is brutal for most. Time attack, you're so right. And people get impatient in sideways ranges, and then they start making poor trading decisions because they need that dopamine hit of being in a trade. So, guys, one thing that you really is important about risk management is just learning not to take trades because you're bored. Learning, you know, a lot of people will say, oh, you know what, something's going to happen. I just feel it, blah, blah. This range could continue a much, much longer. We could be seeing an accumulation range down here, actually, guys. This range could last months. This could be your first tap. We could drop down, second tap, you know, kind of create that inverse head and shoulders or a Model 2 accumulation, or even what's more likely to me is a Model 1 accumulation, right? A Model 1 accumulation, 3 lower lows, right? So this could be tap 1. You come down, you have your secondary tap, which is always lower than your first tap. I would say that secondary tap is probably going to bounce from this general area. Then you get another lower high on the charts before continuing down to make another lower low. And, taking out 74.5K would be that target. It would also satisfy the bigger sideways flat correction here. You get that accumulation in this area, this rounded bottom, inverse head and shoulders in this area, and then you push up. So that's kind of your super cycle theory in action there, seeing an accumulation down in here. But Model 1, you need 3 lower taps. And the reason why I say Model 1's more likely, because we have the double 1, 2 here. Now we need 4 5s in here. That means you get a 5 that's a lower than this. Then you would get a 4, then another 5. So that would give you your tap 1, tap 2, tap 3. But that would also satisfy your Elliott wave impulse to the downside, ending. You get a push up. Okay. Yeah, R-Pink, thank you so much for posting that. Guys, R-Pink posted the BYDFI link in the description and the Telegram community. So if you are signing up, interested in signing up with BYDFI or the Telegram community, links are in the description below. Remember, all you need to do is to get access to Telegram is deposit $100 into the exchange and then click the Telegram link and type in /verify in your user ID. Bubba Trading, welcome in, man, and thank you so much for that comment. Appreciate you being here. Let's look at ADA later. Yes, okay, Odyssey, we'll look at ADA, we'll look at Trump. What about developing a WXY-XZ? So it's possible, actually, a WXY-XZ is possible, but remember, that is the most rare structure. So in Elliott wave theory, you want to go with the more common scenarios before entertaining the most unlikely scenario. So yeah, you absolutely could be looking at a WXY-XZ, which is very similar, guys. It's going to look like a 5-wave impulse down because it's a WXY-XZ, but you're looking at 3-wave moves in here. Instead of impulse in 1, impulse in 3, impulse in 5, you're looking at corrective moves for majority of this. And it's more likely to be impulsive structure right now. Also, increase in volume here. Very big increase in volume. And generally at the end of a WXY-XZ, you're going to see a big spike in volume at the end of the impulse, or at the end of the corrective move, excuse me. It's still possible, absolutely. 2 days nasty, Bitcoin, such a dust. Yes, 2-day, Samuel S., the 2-day does look pretty bad, huh? Like what I'm looking at on the 2-day, it is setting up for nice bull divs, but we do not have them confirmed yet. Let me hide this channel for a second. It's getting annoying. All right. But look at the money flow leaving. Now, on NAMI, the money flow is curving to the upside very nicely, but we do not have bull divs, guys. We want those bull divs. So in order to get those bull divs, we have to take out our 80.5K lows, but look at it would create some very nice bull divs, here. And your money flow would be rising to the upside here. And then hopefully Market Cipher would be starting to bottom out here. So really that 78.3 to 77.3 is a major level that I'm looking at. Major level. Let's go to the 2-hour chart real quick. I want to look at our new naked daily points of control in this area. Yeah, there's really nothing around here, guys. Until we get up to our purple box, that's where our naked daily point of control is in confluence with the daily level. And I believe our 786 was up there as well. Yeah, 786 up there as well. But if we start to break above our local impulse down, now remember, it's this impulse from 94.6 down this structure here. By the way this structure looks, look at it's like a parabolic curve here. That's liquidity, all begging to be taken. So if we start to break above our local resistance, we could squeeze up really quickly up to that area. We have this imbalance. Look at this imbalance within here, this imbalance candle. Now, some of it's been filled already, but we still are entered with inside this imbalance. So it is likely that we do continue up a little bit higher locally. Let me turn on that fair value gap. You can see actually we're hitting the 50% mark of that fair value gap. If we zoom in here and we look at this, a fair value gap is essentially an imbalance in the market. In the market, within small time frames, intraday, it does like to correct imbalances within the market. That's why fair value gaps work. So you can see there was two big fair value gaps on this push down. Big fair value gap within this candle, big fair value gap within this candle. We've already filled to the 50% mark. You can see this gray part right here. And we filled to the 50% mark of that fair value gap. Sometimes a fair value gap will only fill 50% before rolling over. But if we come up to the top of the fair value gap, that would hit our golden pocket, pulled from the highs of wave 3 to the lows of wave 3. Actually, yeah, that would be, let me check the 0.5. Yeah, hitting the 0.5 Fibonacci at 89,362 would fill this fair value gap into your wave 4 corrective target. And you can see we even haven't quite hit our 382 yet, which is common, but filling this fair value gap so the market low time frame correcting the imbalance from yesterday, and then it could continue the overall trend down. Now, let's say we get above this 0.5 and we can actually start to take out these local weekend highs. Remember all those weekend highs that were in there? It's very likely that we do come up and fill this entire fair value gap into our resistance above. So that this 89.3 is an area that we could be looking for a short in that general area if we're looking at continuing this impulse to the downside locally. And I would say because we do have some liquidity resting above those highs, we might come a little bit higher. I don't like that though. It's too close to our golden pocket. Let's pull our large golden pocket here. Yeah, and one thing though, this golden pocket pulled from the 94.6K highs down to our lows that we made yesterday. It is also going to be an important level, guys. It is our anchored VWAP from the 49K lows. And remember, overall on market structure or trends, anchored VWAPs are volume levels, resistance, support. You know, if you're above it, it's resist, or above it, it's support. If you're below it, it's resistance. But anchored VWAPs measuring the volume weighted trend, right? Like the trend based off volume. And so when you anchor it from a key high or a key low, remember we were looking at until we lost the 74K anchor VWAP, that was our main concern. If you guys go watch my videos in this general area, the thing I was talking about over and over and over was that anchored VWAP from 74K. I also said, guys, if we lose the anchored VWAP from 74K, it's likely we dump down a lot. And we did. We actually bearishly backtested it, and that bearish backtest was the big dump. But now we're kind of chopping around our 74K anchored VWAP, and if we lose it, we're in the process of backtesting it and we reject, you expect to make new lows below that low. So it's not a clean rejection like this one here, but oftentimes you won't see clean, entirely clean stuff there. I actually want to check a couple charts here real quick. Remember as well, on this channel, I talk about very often how within these larger macro pitchforks, we often chop within the pitchfork bands, the upper band, the lower band. You know, chop around, create a range within the band, within and around the band, break up to your next level. Now we're inside this pitchfork band, and we rejected the top of the pitchfork. Once again, tap 1, tap 2, tap 3, a distribution range right in this area. This was distribution. We've distributed down to our macro pitchfork support. The last time we hit the bottom of the band, look at what happened. Big move up, right? So now we are at our pitchfork band, and it's likely that we create ranges in here. That's why I'm saying this range could continue, guys. This could continue to develop as sort of a bear flag in here until we dump down some more. And that would be a bear market scenario type thing. If we start to reclaim this upper part of the band, then I would start getting excited that we could see a bigger move up. So that, let's pull our golden pocket. Let's just look at this sideways range here. Yeah, your point of control is pretty much right there. And let's look at our golden pocket. This is going to be a very key resistance. So I would also say, even though if we do come up this high, we would have to say this move down is completed, and we would have to look at it as either a bigger correction, a bigger corrective move, and not an impulse continuing to the downside here. But that 91.2, your point of control of your range, you have a daily level in there. Let me mark that out for you guys on this chart. Actually, excuse me, that's 92.2. It's a bit higher on here. So that's where your 786 is. I'm sorry, I was mistaken there, guys. Mixing up my levels here. But golden pocket, pitchfork, and your POC here. I wouldn't be surprised if we do come up here. The reason why is look at what we had over the weekend. And we have weekend highs. Saturday highs. You see this was Saturday's price action. Saturday. This is Friday in here. This is Saturday. That was our weekend high. Weekend highs often get taken out. Weekend lows often get taken out. So if we come up to fill that, stop out that weekend high liquidity into your big resistance being the top of the pitchfork band, your point of control of your range, and your golden pocket, we still could continue grinding down then to the bottom again. But I would want to start to break this thing down. But we can, this range, like I said, this range could continue for a bit longer in here. God, and wouldn't it be max pain to go sideways for another month or so within this range? Okay, I really got to catch up on this chat. Let me, okay. Thank you for covering it. Would a move above 90K and potentially the 786 at 92? Yes. So Swift Rush V1, to answer your question, it would invalidate, you said would a move above 90K and potentially the 786 at 92.5 invalidate the bearish count? Yes, it would invalidate our local bearish count. So the bearish count I'm talking about is this being an impulse. This move down being an incompleted impulse. So if we even come up to the golden pocket of our wave 3, that would invalidate it. So hitting this golden pocket at 90.3 would invalidate it. Now, that doesn't mean you can't reject from there, right? You can still reject from there and come down, but it's more likely that means we're going to probably create a higher low and then continue pushing up here in a bigger, just continuing this sideways price action. But the bigger impulse to the downside, to answer your question, it would invalidate this being an impulse to the downside, a double 1-2, but it would not invalidate the larger daily impulse down. This impulse here being incomplete. In order to invalidate this impulse, we have to come all the way up to this golden pocket at 97,184. Okay, let me see here. Oop. All right, Mr. Do you think alt season is possible at 2026? Rivals owns. I don't think an alt season is going to happen like we saw in 2021 or 2017. But in 2026, absolutely. An alt season is possible in 2026. We got to remember the way crypto moves in 4-year cycles. If we are going to see a bear market for like the first half of 2026, maybe even till fall of 2026, we could absolutely start to see an alt season towards the end of 2026, or even, summer of 2026, something like that. We could see that alt season. If Bitcoin continues dropping down to 70K and we see maybe, it takes 3-4 months, halfway through 2026 to get down to this level, chop around in here for a bit and then get down here. That could be our big bounce for Bitcoin, which also could mean altcoins could really top off. We can look at the Bitcoin dominance right now real quick. And I will still look at Trump. I will still look at ADA, guys. I'm sorry. And Turbo. Solana as well. Okay, I think some people put too much emphasis on if BTC goes down or up. We can trade it regardless. Yes, Mind Tapestry, great comment there. Guys, we don't need to know if Bitcoin's going to go up or down. Trade either way. And Ja Fuel, welcome in, man. Much love to you as well. I hope you're doing good, man. On BYDFI, can we short and long the same pair multiple times? You can short and long the same pair in hedge mode. Now, do you mean like by multiple times, Dr. X? Do you mean can you open different positions? Like say you're already short on a coin and you open a new short. It depends on how you have your settings, but it will just lower your average entry price and it will keep you in the same position. It will just add margin to that position. I do believe there is a way where you can separate them and you can open fresh shorts in there. I'll double check on that for you. Just join Fruit Miss. Welcome in, man. And thank you for the kind comment. Just joined the stream. Is it time to discuss some alts as well? Yes, we're going to look at some of the alts for this. Guys, I might wait or pull the plug. I am in short from 472 on nat gas. You're in a short from 472. Let's see, 472. Oh, dude, nice short. Okay, so you're short from way up here, man. I would be looking at holding that short open, at least a portion of that short open. If you break above 411, close it. But look at what happened here. You tried to attempt to break out of your value area high. You took liquidity. You fell back in. You back tested it. You rejected. You fell below POC. You back tested it. You rejected. All signs are bearish momentum is going to continue here. So I do not know why I would close a short that's in such good profit until you start coming down to some levels, some levels of support, mainly this key level down here. I would really honestly be targeting 337 to 333. You will see bounces, but here's the thing. Say you come down to this naked daily at 358, you bounce. I would look to maybe take some profit here and then compound your short here, write it down to here. Because overall, the bearish market structure is likely to continue. Also, this could be a bigger three-wave corrective move before you start to kind of push up again. Things. Okay. Meme coin season was the altcoin season. Yeah, I believe meme coin season was too. We saw Trump coin spike like crazy. We saw a lot of these, dog with hat, like things like that. When you see a girl and immediately think you're in love, that's your hormone speaking. Same for the market. If you get a feeling price is going up, that's your FOMO talking. Absolutely, Mind Tapestry. And that's one of the biggest hurdles is the psychology of trading. To not do what, when you FOMO, to not follow FOMO, to not follow bad risk management. If a coin is pumping and going away from you and you feel like you've missed the entry, it's pumping like this and you're going to enter up here after all of this, like that's not good, AXSCB, welcome in, man. I haven't gone over. So, okay, guys, we're going to go right now over some of the altcoins. So someone asked for Trump first. I'm going to be quick with these. We're going to go quickly. Trump, ADA, Solana, Turbo, Trump. And I believe I was looking at it. First off, let me zoom out to the daily chart. God, we were looking at this when it first came. I know there was another chart. I think it was KuCoin. No. MEXC then. All right, we'll just go with the Bybit chart. Well, I immediately see we were in a pretty nice descending channel here. It was attempted to break out of. We failed to break out of that channel, and now we're back inside of it. We're chopping around the midline of that channel now on the daily time frame. We took the liquidity from these highs, right? After you had your big dump on October 10th. You came up, you took the liquidity from those highs, and then now we're dumping. So it looks like that was a really nice short right there. If anyone took that short right there. But now we're coming down to take out your range lows. Now, excluding this crazy wick here, right? Because this wick was kind of an anomaly. So let's zoom in here onto the 4-hour time frame. And I would be looking at this range after the dump on October 10th occurred. So we could pull our volume profile after that dump ends, right after that dump ends sideways. And we would want to be looking at this volume profile here. Let me make sure that's, there we go. Yeah, you're below the value area low of your range. So first of all, you broke up, you took your liquidity, you fell back in. You can see we're chopping around that channel midline. We're starting to lose it now, though. The first tap of the channel midline was a wick below it, but we had a little nice dude. Another move, little nice move, lower high. Another move, another lower high. This time we're breaking through the midline of the channel. So it's telling me this midline is finally starting to break. It was holding a support. It's finally starting to break now. That was also kind of where your value area low was. You can see that was your value area low, your range. Now, I wouldn't be surprised. Let's pull our Fibonacci's here. From the lows of the dump to our highs that we made afterwards. And let's look at our logarithmic golden pocket. Remember, because that's more than a 100% move to the upside, you have to make sure this is based off log scale. Go into your Fibonacci retracement settings, click based off log scale. So that's your golden pocket. I mean, we could drop all the way to this golden pocket easily. Let me throw on a couple more levels here. I want to look at our 382. Okay, yeah. And even the equilibrium, the 0.5 there. What I would say is it's likely that we at least drop to this 382. Because we're losing the value area low of the range, and actually today's daily close is going to be important. If we zoom back out to the daily chart, it's our first daily candle below the value area low. So if we close this daily candle below this value area low, it's highly likely that we at least drop to the 382. But we're in an overall downtrend. Remember, lower lows, lower highs, lower lows, lower highs. Liquidity grab here, but still overall bearish trending market structure. And I would say that 382 around 471.5 would be the next level I'd be watching, because we've already taken out your liquidity of the range lows. You can see we had a SFP of that liquidity here, and that is exactly when we touched the value area low of the range. Let's zoom back in here. You can see that drop there was a drop into your value area low, and you took that liquidity that was resting from this low here. You got a small move up from that, but look at that move up. It looked like a 3-wave corrective move. Spiked. I bet you that ended on a high amount of volume. That spike relative ended on a high amount of volume in that spike relative to the volume around it. So that looks like it was a corrective move that played out, and now you're continuing to push down. I would really say now you might be able to bounce here, back test that channel midline, because now that channel midline is going to be acting as resistance. Same with your value area low. So 555 is now resistance, but even before that, your midline at 538 is going to be resistance, or 539, excuse me. And I would just be watching for this downtrend overall to continue. I mean, I don't see any reason why. You said Trump's going to speak on Wednesday. Trump speaks all the time, and this thing is still dumping. The one other thing we could look at is a pitchfork pulled. Now, I don't want to include this first pump in here. This was all hype. This was listing. So we're going to go with the next high that there is. And we're going to pull that bearish pitchfork. So you're going to pull it down to that swing low and up to this swing high here. And that'll give you very similar to your channel structure, but it's going to give you some extinctions on that to the downside. So yeah, look at this. Sure enough, I would be looking at, and let me double check this. Yeah, too aggressive. All right, and I would be looking at this midline. And sure enough, that midline is going to be coming in around the 382. So you might continue to slow bleed down here for a few days, kind of slow bleed down here until you come up to that 382 and that pitchfork midline. Last time we hit the pitchfork midline, nice little accumulation, push up. Hit the pitchfork midline here, push up. So like that 471, 472 area. Okay, let's go ahead and go to Solana. ADA, we'll do ADA first. I mean, ADA's back down at its support level. We did reject, by the way, guys, we laid this resistance out before we came up to it and rejected from it. Perfect rejection from your naked weekly point of control in your daily level. And now we're dumping. We've even lost our golden pocket, our local golden pocket. At this point, I would say it's highly likely that we're going to take out our range lows. Highly likely that we're going to take out this small range in here. These lows at, what is that? At 37.11. But we are at 786 support in confluence with the daily level and your range point of control. Now, this range point of control is from like a 3-year long range, I believe. Let me zoom out on this. We'll look at this. We'll take a better look at this. It goes all the way, to the December of 2022, so 3 years. Look at, you're at your point of control. Now, that is considered fair value for ADA over the past 3 years. You're at right now today, we're at absolute fair value for ADA over the last 3 years. This could be a bigger 3-wave corrective move coming right down to your 1-to-1 target, your POC, and your 786 pulled from this low to the cycle highs. It is a very big support level. Now, at a very big support level like this is more of a macro support level here, right? It's very unlikely that you're going to do this. Bounce, come right back up. What is more likely to happen is you're going to form accumulation down here. If the market is bullish overall on ADA, you're going to form an accumulation range that could take months to play out. And then you're going to break out and see expansion. You're going to see an accumulation range that takes time, and then you're going to see expansion, right? So we could be looking at playing this range. Now, if we lose this range, I mean, we do have a nicer support level. Not nicer. I would say this is the nicest support level we're at right now. And if you are bullish on ADA long-term, it's not a bad time to buy. Let's look at our daily time frame. Let's see if there's bull divs here. Yeah, we were seeing some nice bull divs here on this ADA. So let me clean this chart up just a bit here, guys. I want to move this over and get it out of the way. Look at, as we were coming down into that POC, lower lows on the price action, higher lows on your momentum waves, bull divs confirmed. Money flow was curving to the upside on NAMI. Remember, NAMI is faster than Market Cipher B. Now, on Market Cipher B, your money flow still looked very bad, and bad money flow will always overpower a single drive of bull divs. So now what would be nice to see is come down to make a new low to take out that low to create 3 drives of bull div, and then now it would create another bull div here with your money flow curving to the upside, and that would be a nice signal. It would also, overall, depending on how quick we come down there, you would have local bull divs on NAMI because it's quicker, and then you would have more regional bull divs on NAMI. Money flow, you'd want to be at least creating some bull divs on money flow as well. You have this money flow, and then if this money flow was higher. So I would say taking out that low at 31.77, if it confirms bull divs on the daily, could be a nice little low where it could be the low of an accumulation range. This all looks impulsive here. This could be your tap 1, come down, tap 2, tap 3, kind of creating that sideways range. chop around, break that range to the upside. That's your bullish scenario. Now your bearish scenario, like let's say we start to lose this point of control. Now I would, because it's such a high time frame range, you would want to lose it on and close below it on the weekly. You close below it on the weekly, you probably are coming down to your monthly level and your macro 786 down there. Let's see what else was in here. Why did I have this box so wide? I want to be looking at naked monthly points of controls. And nothing in there. Let's look for naked weeklies. I don't think it's going to go that far back, unfortunately, but yeah, it doesn't. All right, well, now we can get rid of this. This has been hit. This has been hit. Here's another thing on ADA. You're in an overall downtrend, making, remember we were talking about the Elliott wave count. You have your 1-2s in here. 1, 2, 1, 2, all of this being a third wave. 4, 5, 4, 5. We need 2, 4, 5s now overall to complete this. You have your nice 1-2 setup in here. This is your big third wave down. Completed. I would say that low is completed here. And the reason why is because we broke market structure bullishly, locally. And now we could come down for a fifth wave down, coming down to new lows. So if you don't SFP 3177, you want to see a SFP. That means a peak below it and a get back above it as soon as possible within an hour to 4 hours and start to close above that. Then you could look for longs on the SFP, the confirmed SFP. And remember, the way to trade a swing failure pattern is as you're coming down to that liquidity level. Sorry, let me come over here. As you're coming down to that liquidity level, you pierce below it, you break above it. The second you break above it after piercing, you could enter long. Your stop is going to go below wherever that wick low is, and you're going to be targeting. I would really even just be targeting your lower high golden pocket, wherever that golden pocket would be. You throw that golden pocket on the chart. I would be targeting the golden pocket, which is probably going to be the point of control of this range as well. Value area high of this range, it looks like. Value area high. Yep. So that's what you would do on a swing failure pattern. If you don't SFP this low, I think it's highly likely you're going to come down to your monthly in your 786. Like this bigger box down here, we could even shorten this up down to within, like we could put another box within that box. This guy here, monthly and macro 786, log 786, between 34 and what is that, 33.5, let's say. As far as your local range goes, you are below. Let me hide this to clean this up, and we can get rid of this. Oh, I'll hide this one too. I'm going to get rid of this daily. We've been tapping into it. As far as our local range goes here, you're below the value area low of that range. So if you reject from that value area low, it is highly, highly likely you come down and take out these lows. Another thing, look at this. This move from the bottom, very clear three-wave corrective move. After your three-wave corrective move, you're dumping again. I mean, this was probably the nicest three-wave corrective move up to your local volume and time frame resistance, and now looks like you're starting to impulse down now. So I would say the highest probability on ADA is to take out those lows. The question is it just going to be a peak takeout to grab liquidity and then back up, or is it going to be a continuation down? So I would not set a limit long position at that low. You have to wait for the confirmed swing failure pattern. And then I would be watching for the breakdown to 34 cents, really. Okay, let's go to Solana. Guys, give me just 1 second. I just got to get up 10 feet away from my desk and grab my water. Okay. Solana. Now on Solana, I was looking at some price action today on it. I'm going to hide this little channel real quick. Here's the thing on Solana, guys. We are still within our larger range, our sideways range between the point of control and the value area low. Sideways range that has developed. This is the most important structure on the chart right now on Solana. We zoom out. Let's zoom out to the 8-hour chart. First off, we did reject from the top of the pitchfork. It was also a macro 786, and there was a weekly level up there. We worked our way down through the pitchfork. We flipped the midline of the pitchfork into resistance. We're now chopping within the lower band of the pitchfork. Between the value, the point of control and the value area low. I do not like how we keep making higher lows just barely above the liquidity, I think we're going to sweep these lows. Just like on ADA, I think it's likely that we sweep those lows. What would be nice, and if so, we want to concentrate on this price action, this range in here. We're at a more macro support level. If you are super bullish on Solana, it's your range value area low going back to March of 2024. So almost a 2-year long range, 3 months shy of 2 years. I do think the bottom of the pitchfork is something to be watching, around 113 to like 114, depending on when we get there. But another thing we saw up in this range is sort of that 3-tap left shoulder, head, right shoulder, kind of a head and shoulders. And this thing could break down a little bit. But a lot of people look for head and shoulders at the bottom of this is the wrong spot to look for a head and shoulders. Remember, a head and shoulders is a topping reversal pattern. So you want to look for it at the top of a big push up. You don't want to look for it at the bottom of a dump. You want to look for an inverse head and shoulders, left shoulder, head, right shoulder. You want to look for the inverse head and shoulders, which is a bottoming reversal pattern. So even though this is sort of like a head and shoulders here, a lot of people, if we start to break down, they're going to think, oh, we're breaking down all the way, but I would say watch for the fake out before pumping, because it's the wrong area to look for it. But also just in terms of playing the range until it breaks, you're going to pull your volume profile, all of that price action since you lost the POC over sideways. We're bouncing today from the value area low of the range on this. And yeah, here's the thing, guys. It's likely that we are going to come take out this liquidity. But this is probably going to form this range is probably going to continue to mature a little bit. I don't think it's done with yet. The multiple rejections from POC rejection, POC rejection, POC rejection. This one we came up to take liquidity, POC rejection here as well. All these POC rejections, I do think it's likely now we've taken liquidity at the highs of the range, but we haven't taken the liquidity at the lows. So I think it's likely that we do come down and take liquidity. The question is are we going to bounce here first? Maybe do something like this before coming down. Now let's zoom in onto the 2-hour time frame. Let's just look at our volume profile here and look at the important levels within this sideways range. So we're bouncing from the value area low of your macro range and the value area low of your local range. This, to me, looks corrective. And if you saw when I first put on this chart, I had a channel on it. Okay, that channel is a 15-minute intraday trend. We're just chopping within this channel sideways. So it's algo buying. Algo buying, and guess what? This might continue. This algo buying corrective move might continue until we fill this fair value gap in here. If we zoom out on the hourly or 2-hourly chart, you can see all of this is an imbalance in here. So we might continue kind of working our way up to fill in that imbalance. Let's pull some Fibonacci's here. So I want to pull a Fibonacci from the last big rejection of the POC to our lows that we made. Okay, and I want to turn on our 382. Your 382 often rejects you in a strong trend. Okay, so that 382 is going to be coming in around your POC. That's important. That if that rejects us there, it's going to tell us that this downtrend is still strong, right? This one, because 382 will often reject you in a strong trend. Then we can pull in from our most recent high to our low that we put in yesterday. I want to look at our golden pocket, and more importantly, between the golden pocket and the 786 is where we're really going to want to look. Okay, so I like this general area is starting to look really nice because look, it would fill in this fair value gap. You can see that fair value gap would be filled right into that golden pocket at 131.28. And we've already filled about half of the fair value gap. You can see this gray part, half of it's already been filled. And then we could look at some naked daily points of controls within this range. We'll look at our naked weeklies really quickly. So we can't count this one because it's only Tuesday. This is our naked weekly developing for the week. We already taken the naked weekly from last week. So let's look at our naked dailies. And really, yeah, we don't even have any naked dailies up there. Wow. That's kind of surprising, but there's no naked dailies in there. Do we have any daily levels? We do. No, this one's been taken. Yeah, honestly, there's no daily levels either within that really area. Even this daily was tapped. This daily was tapped. This daily was tapped. This daily was tapped. Okay, so no daily levels even. What if on the daily time frame? Let's just look at this on the daily time frame. Like, look at this. Money flow is starting to curve to the upside. You do not have bull divs because these are higher lows here. So to come down to sweep out that liquidity would create a nice bull div on the chart with money flow starting to curve up here. NAMI is quicker. The money flow is leaving on the daily time frame. Let's zoom into the 4 hour. Let's look at it on the 4 hour. All right. So the 4 hour, we actually do have some nice bull divs on NAMI. Very nice bull divs, I would say, on NAMI. On the 4 hour. Into your value area low. But if you look at this, lower lows in the price action, higher lows in the momentum waves, and now your money flow is starting to curve up here. So I would say this local channel that we're in right now is likely to bring us up to fill in that golden pocket around 131.28, at least around 131.28. Zooming into the hourly chart, this is a very nice kind of corrective channel that we're seeing here. This little guy right here. Now, I was also looking at this bigger channel, and let me make this wider so you guys can see this a little bit better. But this, I pulled this channel just based off of our two last rejections from the POC. So from this high to this lower high to the low that was made in between, these three pivots here. Now we're looking at this structure down here. You can also see we bounced from the bottom, and I did this earlier today. We bounced from the bottom of the channel. It was also our value area lows down there. The midline of that channel is going to be coming in right around your 786 and your POC. I mean, like this, depending on how quickly it takes to get up here. Right now, we're grinding really slow. But if we continue to grind slow like this, coming up to that 786 and that midline, that POC, and that 382, I would say this general area in here is really looking like we could get that drop back down. And the reason why also, guys, is this corrective channel, the smaller corrective channel that we're seeing here, this just looks so corrective to me. Like if we look at this, let's turn on our volume here. Okay, so decent spike in volume in the middle of this channel. But, you know, overall volume was going down. Yes, we saw a spike into that fair value gap, and that's probably because it was an imbalance. But now volume starts to go down again here, and we continue to rise. I really would be looking at first that golden pocket at 131.28. You can see it's also the top of our small channel. Let me clean this up. It's the top of your small channel. So if we just continue to we bounced from the bottom about, 2 hours ago? 382, golden pocket, top of the channel. Maybe we see a small rejection, and then maybe we kind of get one more grind up to the 786, to your bigger channel midline, to your POC. But in this general area, I'd be looking, 131 to like 132.89. I'd be looking for a rejection, and I would short it. I would stay in that short until I take out 121.47. Okay. And then if we do get up to, 135-ish, guys, let's say, let me hide this smaller local channel. Let me now get rid of these for a second. This pitchfork midline, I'm going to hide our big, large range. This pitchfork midline, pitchfork band that we're kind of chopping in, and you guys often hear me say we chop in and around the bands of more macro pitchfork structures. So we're chopping in and around the pitchfork band. But something that is really key here is, nice kind of 3-wave corrective move. Tried to break above it. We couldn't. We lost it. We back tested it. And now we're creating bearish structure. We lost the bottom of the band. We back tested it. We failed there. We created new local lows. So now if we do come up again, because this was kind of an immediate time frame back test. Actually, we had immediate, larger, and then you could get that one larger, kind of the 3-tap thing, 1, 2, 3 tap thing, drop down. So there is a possibility we could come up and grab that liquidity from, when was this? Monday's highs into the pitchfork band. That could be a scenario where we continue to grind up to grab that liquidity before coming back down. But to me, it's less likely. To me, we're going to continue to create bearish market structure, making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Probably reject from that golden pocket around 131.89, or what was that? Yeah, 132-ish. And then continue down. Okay, that's about it for Solana. Now, remember, if you don't grab the liquidity and then get back in your range really quickly, then you're probably going to drop to this pitchfork around 113. I would say it's probably going to take you a little bit longer. 113.25 to about 114-ish. So I would be watching for that. All right, let's get on to, let's see, Turbo, was it? Yeah, Turbo, man. We're still chopping within this sideways range as well on Turbo. We are coming down to our support level that we had marked out. Let me just extend this. That's our support level. We did reject from that golden, I guess. Yeah, kind of rejected from that golden pocket area. We were looking at that, what was that, last Thursday. Oop, what did I just delete? That box has been worn out. We grabbed the liquidity already. We attempted to break out of the volume profile just to grab liquidity, and now we're dumping. So look at, we broke out of the volume profile, grabbed the liquidity of this high, fell back inside the volume profile, back tested the POC bearishly, rejected, came down to value area low, attempted to bounce, but made a lower high, and now we're losing value area low. Very important there. We're losing value area low. If we close the daily candle below this value area low at 001976, we are likely to continue down to actually take out this liquidity at 1759, 001759. I would be looking to come down there anyways. You can see we have our box of support. Let me just move this over. We have our box of support between the daily level and the golden pocket. But I would actually say, if you wanted to really be a sniper, I would even say this box, I threw it there because the daily's there, but this is your good zone right here. Golden pocket, liquidity grab. Anytime you see a liquidity grab into a golden pocket, that is very key. So if we start to close daily candles below this value area low, it's likely we come for this liquidity. And once again, see a flat correction. A, B flat, C, taking the liquidity, and then we could start to impulse up here. We would have to look at how it's going to be. But also remember how we were talking about that bigger bottoming reversal pattern. This is where you would want to look for an inverse head and shoulders at the bottom of a dump. Left shoulder, like kind of left. What the heck is going on here? Okay, there. Left shoulder, head, kind of right shoulder in here. Seeing that bigger inverse head and shoulders or like accumulation that could occur. So watch that golden pocket at 1772 to 1729. Let me make sure that's on log scale. Yep, it is on log scale. And then if we lose that, look at this was a fair value gap. Once again, you do have a little order block. You see this is a little order block in here. 12-hour order block. But this fair value gap in here, in this imbalance, you know, kind of this, well, actually coming up to the top of this candle right here would fill it. But yeah, I think that it's likely that we would drop to the 786 in your naked daily point of control. You do have an order block before then. That order block is obviously going to be where your daily level was at. If we look at that daily level. Let me. Oh, wait, never mind. There wasn't a daily there. That was this daily level. Yeah, and I would say this grind down is actually developing really nicely. Look at the way we're grinding here. It does look like a corrective descending channel in here. And if we continue to grind down in this descending channel, look at this, what we're building right now. Bull divs here, multiple drives of bull div, multiple drives of bull div, but your money flow is very bearish. So the money flow is always going to overpower the bull divs. Now, say we keep grinding down here like this, take that liquidity, creating this structure, but by then your money flow's bottomed out and is starting to come up. The liquidity grab into this golden pocket could actually be a really good long position. And I'm actually going to set an alert here for that. SFP long. So if we do the confirmed swing failure pattern, I would be looking to long that SFP there and potentially bring it up to your point of control. Let's see where that. So what we could look at is once we hit this golden pocket, overall, it would maybe finish this flat correction, ABC flat, and then you might be able to get a push up here. But the first area I'd be looking at is pulling your golden pocket from the highs of that flat corrective move to the lows. And wherever those lows are going to be, let's put it on the 0.65. Now, this is a theoretical fib right now, but between your golden pocket and your 786, we actually probably want to turn that on log scale. Yeah. Because, and the reason we're turning it on log scale is because this dump, that dump would be more than a 30% dump. It's a 39% dump. And remember, on if you're on the log chart and you have more than a 30% dump, you need to adjust your Fibonacci's to based off log scale. But look at, that would be such a nice trade right there. Long the SFP, stop would go below that low, which would probably bounce from the 0.65. TP would be your point of control and your golden pocket. That's almost a 18 to 1 risk reward ratio. Now, on the bearish backtest of the value area low, say we continue grinding down here, SFP here, you might just come up to backtest that value area low. And if you reject, you're probably going to continue down. So I would at least look at a TP1 at the value area low. We can even pull a volume profile of this flat corrective range. Yeah, I don't like that too much. You also have your kind of nice channel in here, and you're kind of just grinding down. But if you grind down on this midline until you grab that liquidity, I mean, it looks pretty good to me, guys. This turbo looks like it could play out that long. The liquidity grab into your golden pocket could play out for a decent long position because we are building some nice bull divs in here. I want to go to the 4 hour. Let's see how the 4 hour looks. Yeah, I mean, look at lower lows, higher lows. Now on NAMI, you do not have local bull divs. And remember, our setup we want to have our primary good setup that works at least 80% of the time in my testing of it since I've had NAMI and Market Cipher B is when Market Cipher B has momentum bull divs with money flow bottomed out and starting to curve to the upside. And NAMI has bull divs locally and money flow bull divs as well. That is the primary setup that works so much for me. Right now, we're not seeing that. We're not seeing the bull divs on money flow. You can see this money flow wave is lower than this one. We also don't have bull divs on NAMI. So I would say locally, it's likely. Plus on Market Cipher B, your money flow is still looking bearish. And bearish money flow is always going to overpower a single drive of bull divs. So for me, I would say this is likely to keep grinding down at least until you hit the daily level, but most likely until you grab that liquidity. And this looks like algo trading to me, honestly. Yeah, we can actually see how this position plays out. Remember, this is a theoretical fib right now because we haven't come down to the 0.65. It was theoretical. Okay, let me check the chat here, guys. Where was I? Short on Sol at 134.86. Jaffiel. We might not make it up there is the thing. But yeah, if we do 134.86, okay, is that our local 786 or our local 886? At 134 is your local 886. Maybe 134.86 is the high on a different exchange. This high on a different exchange. But I would actually be looking at that golden pocket instead. At 131.89, I think it was. Yeah, 131.28 ish. Because you do have that channel coming up into it. Now, if you do continue to grind in this lower half here first for a while, and then you flip this midline, maybe hit the POC or hit that golden pocket, you might continue up to that 786 that was above, which is where your bigger channel midline and your POC of your range is, your sideways range, this sideways range. But I would say this, Solana does look to be kind of finding a bottom in here, but until we grab the liquidity from these higher lows, I'm not so sure. I think we're going to grab that liquidity first, creating a bigger distribution before actually, or accumulation, sorry, before actually seeing a good long play out. I think this liquidity is begging to be hit, begging to be taken. Trump coin will either die or have a scam pump before dying. Yeah, I mean, of course, if something big happens with Trump, it's probably going to pump a little bit. But Divine Hood, in my opinion, you are the only one that explains things so clearly. Thank you. Well, Fruit Miss, thank you, man. Thank you for being here. Thank you for the kind comments. And I'm glad it helps you guys in some ways. And guys, if it does help you, if the TA helps you in any ways, will you please hit the like button for me? Please subscribe to the video. Also, I don't know if I took a second to shout out the partners of the channel. So obviously we have BYDFI. They're the main partner of the channel. They're offering the 20% discounts on trading fees if you sign up, and you can earn up to 40% depending on if you deposit larger amounts into the exchange. They're offering up to $8,100 in futures trading bonuses. And I've partnered with them to create a Telegram community where if you do deposit $100 after using my affiliate link into the account, you can sign up to the Telegram. Just click the Telegram link in the description and then type in /verify in your user ID, and that'll get you into that Telegram community. Once you are in, you are in. It's free. I do post my thoughts on the market, mainly Bitcoin, but I do talk about altcoins sometimes when there's good opportunities. You can tag me in the chat, ask me questions, and I do try to post trade setups in there as well. The second partner of the channel is NAMI Trading, which is this momentum and money flow indicator down here. So for me, it's been an invaluable tool, guys. If you're in any expertise, any niche, like plumbers, they have proper tools to do their jobs to make them experts at the job. For me, as a trader, this is one of the tools I use to be to be better and more profitable with my trading. And so if you're really going to be a trader, you want to invest in the proper tools to help you become more successful in trading. For me, NAMI and Market Cipher B are the two that I use primarily as far as oscillators go, momentum and money flow oscillators. And I've partnered with NAMI. They gave me a 50% discount for if you guys use my affiliate link, which is in the description of the video. And Divine50 is the 50% off promo code. You can type that in the promo box. But Divine50, if you use my link, you can get 50% off. And NAMI is a great partner of the channel. And then lastly, we do have Bybit and MEXC. They're both great exchanges, both offering some discounts on trading fees and both offering some futures trading bonuses if you do sign up using my affiliate links. Okay. Got it, Divine Hood. You're right. I have taken some positions out already. I think I'll hang on. Nat gas is seasonal too. Winter against warmer weathers. So let's see. Oh yeah. So in winter, they use a lot more natural gas. So does that cause the price to go down or up? I think that would probably cause it to go up, right? Supply and demand. But I mean, as far as the TA looks goes, I do think natural gas is likely to continue dropping. We're below the POC. Remember that POC? I think it was 402 or 403. As long as you're below that POC, you have a high likelihood to grind down. And to grind down to your level at 337 to 333. Now, of course, you're going to probably see some bounces along the way. Let's pull a Fibonacci. Where is that? Here. You might want to watch this golden pocket here for a local bounce. And actually, let me change that to log scale real quick. Yeah, I would say the naked daily point of control at like 358 to 356. But then the next one would be the big support levels, obviously where the box is at. 337 to like 333. But you've already lost your value area high, back tested it, rejected. Lost point of control, back tested it, rejected. I mean, it's likely that even if we bounce here to come all the way up here before coming down, I think it's going to continue. I mean, I would hold it. I would be holding it. Personally, I'm not telling you what to do. And by the way, I'm not a financial advisor. I don't give financial advice, guys. I'm telling you what my ideas would be, my kind of thoughts on how I would play a trade if I was in it. Oh, yes. Well, Fruit Miss, we'll look at night. I'm sorry. I forgot about night. We definitely will. Let's go into night right now. Let me read this chat a little bit. On ADA, where did you pull the fib from? Because on my chart, I'm bouncing from the 886. I pulled from 3712 low. Okay. I'm going to go through night, but I want to check this ADA USD. Okay, you pulled it. Are you talking about? So let's zoom out to the daily chart. I had a 786 that was right at the POC here, and that was pulled from this low at, what is that? Yeah, 2782. So that's your wick low there. Up to your high. And then if you turn on your 786, but the 786 has to be based off log scale because this is more than a 100% move to the upside. Remember, we're on the log chart. And if you're looking at this move, 372%. So you're going to take that You're going to change that to based off log scale, and it's going to give you your proper 786 retracement. And you can see that 786 retracement is coming in right at that point of control. Now, if we extend this Fibonacci, not from this low, but from the bear market lows, so you pull this down to the bear market lows, you can see that the 786 is right next to your monthly at 33.47. And you'd still want to keep that based off log scale. So I pulled from 37.12 to the 0.48 high. So you're talking about this. I see you're looking at a local fib here. You're looking at this fib from range low of our small range to range high. Yes, and you wouldn't want to keep that on log scale because that's not more than 30%. So yes, we are coming down to your 886 and bouncing from that local 886 Fibonacci. And remember, in sideways ranges, your 886 can bounce you. And I would say, yeah, you are starting to bounce from that 886 Fibonacci, but look at, you already attempted to bounce from it on the daily the day before. So just be careful because it's not a fresh 886. You've already tapped into it. You tapped into it yesterday and you're kind of grinding through it. This isn't really a nice clean bounce or even like a clean wick past, hold it, and start to move up. You're chopping through it for the last 2 days, making it less likely that it's, sure, overall, higher time frames, yeah, we might see a couple daily wicks below it, but the daily candles close at this level. I would just say, and this just looks corrective to me. That looks corrective, but we'll see. You know, we might be able to make it up to backtest 39.62, the value area low of our range. I think it's more likely, even if we come up here, reject, I think it's likely that we are eventually going to take out that 37.12. Night. Okay. Oh, it's a newer coin. Okay, is this the one you're, Fruit Miss, is this the one you're talking about, this newer one here? BT has been discussed in the beginning stream. Yeah, and guys, we'll go back to BTC, I promise. And AXSCB, thank you, man. I appreciate that comment. Yeah, please hit the like button. Decrypto, welcome in, man. Thank you so much. Check Pippin. Okay, we'll check Pippin as well. We'll check a couple of these. Funding rate is at 2.5. Settling in 30 minutes. Okay, I already shorted. Oh, you already shorted that. Awesome, Joffiel. If only there was an easy... that if only it was that easy with natural gas. Yeah, no joke, right? To buy it when it's winter because it pumps and sell it when it's summer because it dumps. Because of Divine Hood's recommendation, I got NAMI and I really like it. Very good pattern for Market Cipher. Yeah, it's quicker than Market Cipher. The money flow is actually based off real money flow. If you're not good at spotting divergences with your eyes, it prints the divergences for you on the chart. I think it's a great tool, guys. And for scalpers, it's definitely much better than Market Cipher for scalping because it's so much quicker in confirming them. I shorted because we had money flow leaving, also bear divs, and we were testing the pitchfork again. Yes, okay. Very cool, Joffiel. So I shorted. We had no business pumping. I figured, well, Joffiel, I'd be staying in that trade until 127 or 121.47 gets taken out. But that's a nice short on that bearish backtest of the pitchfork band. Very good, man. Massey33, welcome in. Okay, let's check out night real quick. Then we'll go back to Bitcoin, guys. I just want to check this out here. So there's not much we can do with this because it's such a brand new coin. But besides the listing pump and dump, right after that ended, I would pull a volume profile, look at your sideways range. This is really kind of bad here because look at this big volume gap within this profile. Now, I will say this. You do have a very nice kind of, if we're looking at this, because it's a brand new coin, we could look at the smaller ranges. You kind of had this small range in here, and now you have this small range in here developing with that big fair value gap in the middle, obviously. This looks corrective to me. Let's pull a channel here and look at that corrective structure. That's your descending channel, kind of you're trading in right now. And maybe I would even pull this to this high. Let's see. No, that's the one. Okay. Um, yeah, and okay, let's pull a volume profile of this smaller range here. Nothing really in there. And I would want to look at the bigger descending channel as well. We'll make that one blue. Oop. Yeah, so we have a couple of channels, and it looks like it's very heavily algo traded right now. But you can see midlines being respected on this larger channel. Midline respected, kind of chopped around, busted through it. We might continue this all the way down to the midline, but I do think it's likely this looks corrective to me. And we might break out of this thing. So let's pull our Fibonacci from your prior range lows to your highs. Oh, that looks nice, actually. Okay, we haven't hit that golden pocket yet. I like this golden pocket because look at this. You have your prior highs resting right into that golden pocket. Prior highs. You're already kind of testing them, but you want to actually hit the golden pocket. So the prior highs of this guy here into that golden pocket looks pretty nice. Let me make sure something here. All right, that's an 80% pump to the upside. Generally, you're supposed to put that on log scale if it's 100% or more. It's close to 100%. I'm going to check this to see how it looks. And then I want to pull that point of control again. Let's do it from right here. Yeah, okay. I do like this log golden pocket. This is close to a 100% pump. And the golden pocket is pretty close to your POC. You're going to have a lot of volume in this area here. Even if you look at this small range, yeah, your POC and your value area highs right around here. So I would say generally, if you don't bounce from the non-log golden pocket really quickly here, and I would say like the top of it, the 618 at 53.74, then you're probably, if you don't bounce from 53.74, then you're probably going to drop to where the log golden pocket is at, I would say between this area here. Let's check for naked daily points of controls in this thing. Yeah, that's your support. Look at this. You have a naked daily point of control in there. Right here as well. Oop. And remember, volume levels are important. So naked daily point of control, where your range point of control is at pretty much 49.45 or like 50 cents. Let me get that right on it. 49.54 ish. Up to your 0.65 at 50, 05, sorry, 05 to 0495. So I would watch us to continue grinding down in this smaller channel. And look, it's also the bottom of the channel. So that actually would be pretty nice if you're kind of grinding here. Lose that midline, maybe bounce, reject, then come down to the bottom of that channel. Could be a nice little long. Now, your money flow is still leaving pretty aggressively here. You did just print a hidden bearish divergence on that lower high. And remember, a hidden bear dip is a continuation pattern. So for me, the highest probability is night is going to continue this local downtrend down still. I would be looking at that support level. If you lose that, I mean, there's probably not a lot. Yeah, there's no naked dailies under here. You could look at your 786 fib. But because this is a new coin and we don't know a lot about it, you have your initial pump, your kind of dead cat bounce high here. You could be looking at lower low, lower high, lower low, coming down to the bottom of the channel too. So I would also look at potentially, if the golden pocket, if that 0.5 to 0.495 doesn't hold, you might drop all the way down. Let's pull a trend-based Fibonacci extinction if we're going to look at this as a bigger three-wave corrective move. So from our high to our low to our lower high. Yep, I mean, that would be where I'd be looking. Between the 1-to-1 and the 1.236. By the time we get down there, it's probably going to be in alignment with, you know, this guy down here. That's a way far away though. So for now, you know, I wouldn't be looking at that yet. Okay, let me go back to Bitcoin, guys. Let's check out Bitcoin. What is Bitcoin doing? Okay, I think Bitcoin locally is going to continue to pump, and we forgot to look at Bitcoin dominance. We'll look at Bitcoin dominance here in just a second. You still haven't hit that 382 yet. So pulled from the highs of your potential wave 3 to the lows. I don't like how this looks 3-wave corrective here. So 3-wave corrective, that is almost straight up, but you have another 3-wave corrective move in here. Straight up, you know, this isn't the cleanest double 1-2. I have to say that. Now I could see 1, 2, 3, 4, 5 here. It doesn't look nice to me. You know, I will say this, as far as the double 1-2 impulse goes down, and I saw Andy was also looking at this as a double 1-2 impulse. I do have my reservations about it because of this, and also because we were traced up pretty much to take out those highs. That's very uncommon. As far as our support resistance flip goes, though, let's just look at this. See these prior highs here of this ascending channel? So let me just throw that on there. We had our ascending channel that was in here. A high, you know, you broke above it, and then it was acting as support. So this high here was acting as support through all of this. And now we've lost it. So coming back up to that general SR flip level, right around your 0.5, it was also where your what was that? Okay, let me do that more sideways flat range after that ascending channel ended. This flat range up here more. Okay, your value area low is close by that. But yeah, I would say really this level up here looks pretty good, guys. This 91.3 as a resistance. Wow. Okay, sorry about that, guys. Give me 5 seconds to text this person. Maybe 15 seconds. All right. Let me check the chat here. Partner. No, I am not partnered with Market Cipher B. I've never even reached out to him. I don't know if he hasn't reached out to me, at least that I've seen. So, Crypto Face, I probably would partner with him because I've been using Market Cipher B since, gosh, 2019, I think. 20, yeah, 2019, 2020, something like that. And I love it. Um, it's just, yeah, hasn't come to pass. Oh, Pippin. Pippin. Let's go to Pippin. That's right. Pippin. Wait, can you take a look at open? Yeah, we'll look at open interest too. Pippin USDT. Open interest on Bitcoin. Well, this is an aggregated open interest. Okay, so it's taking into account most of the major exchanges, but open interest is dropping during this rise up. And the reason why is we had some late shorts coming in. You had some late shorts. Look at all of this. So if we look at this open interest here, this dump down yesterday, or what was that, Monday? Fresh shorts coming in, and actually throughout the whole weekend. But mainly, hold on, let's do that. Yeah, mainly on Monday when market opened on Monday. You can see we dumped on New York Open on Monday. If we go back to our order flow, when we opened on New York on Monday, our CVD was going down pretty steadily, but your open interest was rising here. So that means that fresh short positions were coming in. Now, at the time, those fresh short positions successfully pushed the price down. But you can see towards the end of this move here, let me get rid of that. Primarily, this chunk in here, lots of shorts coming in, and a lot of those were fresh short positions towards the end of your move here. So now we're rising up. We're starting to squeeze out some of those short positions, and that's why your open interest is dropping here, and you are getting some rises in open interest. You are just seeing positions close out. It's a little bit of a short squeeze is what I'm saying. And remember, with short squeezes, if you don't have new money come in to support the price, it can just roll right back over. So you want to see, like, say we come down to the VWAP, you want to see some people longing the VWAP. You want to see your open interest starting to tick up here, CVD starting to tick up here. Okay, Pippin, real quickly here. Is this the right one? Adam or Bubba Trading, is this the right one? Super scammy coin, super bundled supply. They're just running the scam. Okay. Yeah, it's not a sustained move. You're right, Adam Hartz. It is a short squeeze. Wow. Yeah, I mean, this thing looks scammy for sure. It looks, kind of like a Ponzi in some ways. Yeah, you're breaking out of your volume profile. You bounce from the POC, you're breaking up above the point of control of the range, and you're really in price discovery right now, at least on this exchange. Let's check the Binance chart. Okay, a little bit better there. Let's pull that volume profile. Kind of when you started to find a bottom. Yeah, same thing though. You're breaking above, you bounce from the POC, you're breaking out of the volume profile, breaking above your prior highs. You can see these prior highs here. You broke above them, you kind of back tested them locally as support, and then you're continuing to push up here. But to me, it looks like this is part of an impulse to the upside. Maybe this is a wave one, a wave two. You're in your big wave three here, pushing up. I want to take our trend-based Fibonacci extinction. We'll go from the lows to the highs. Lows. You are coming up to your one-to-one target. Actually, that's kind of where you're rejecting from now. You do have bear divs on the chart at your one-to-one. Higher highs in the price action, lower highs in the momentum waves, lower highs in the momentum waves. NAMI money flow is draining out as you're confirming those bear divs. Market Cipher B is looking like it's starting to want to roll over here. So that's on the daily time frame. So you're coming up to a major, like, daily corrective target. Now let's zoom into the 2-hour chart, and I would be looking at this range. And today alone, you finally hit that 1-to-1, and now you're dumping. Yeah, I would say, your prior highs were in this area. You're kind of trying to hold those, but you grabbed liquidity from your micro range lows. You can see we were kind of ranging within a small range in here. Broke above it, finally hit resistance. Once you hit resistance, you drop to take that liquidity. You're starting to rise again. What I would be watching for now, because you took those lows, it is a bearish break in market structure. This is considered a market structure break. Even though it was only an SFP, you did break market structure bearishly. Because of that, and because there is a big fair value gap and imbalance in this candle, you could just be coming up to fill that imbalance. So I would pull your Fibonacci from the highs to the lows, and I would be looking between the golden pocket and the 786. And in this general area, you could look for a lower high for a short, potential short. Yeah, your fair value gap would be filled right at that 786. That imbalance would be filled right at the 786 at 45.3. No naked dailies in there. Man, yeah, and you're almost forming like this wedgie type pattern now that could be breaking down here. You do more like not bear divs, more like equal highs here. But you are seeing some bear divs on the money flow. Look at that. Money flow is getting lower and lower as you're getting higher and higher here. No real local bear divs on the 4-hour on NAMI either. But yeah, you do have some bear divs, and even bear divs. Money flow bear divs here. So you have momentum bear divs, money flow topping out here. Momentum bear divs plus money flow bear divs into your 1-to-1 Fibonacci extinction. If you're long on this, I would consider taking some profit. That's for sure. Especially since you broke market structure bearishly here. Now, let's say this is going to be an impulse, a 1, 2, 3, 4, 5. You could look all the way up to the 1.618 here. That might be a big push, but let me just. I mean, if this is the third wave, this is where you can use pitchforks. You can pull a pitchfork from the lows of the impulse to your wave 1 highs to your wave 2 lows, and you want to use an original pitchfork because your third wave is generally your most explosive push to the upside. So now we use that pitchfork. Let's go to the 2-hour time frame. And I hate how TradingView does this. Let me adjust this. Yeah, you're rejecting from that pitchfork band and losing it. So let me check one thing out. Let's look at the modified. Actually, that looks much nicer as far as respect in the past goes. Rejection, rejection, rejection. Bounce from the lower band, came up to the upper band, rejection. Rejection from the top again. Bounce from the midline, rejected the upper band, rejected the upper band. So I would look at potentially coming down. Yeah, another lower, like a short from the local golden pocket retrace. You could also be looking at this as a bit of a range that's going to form in here, and then you get up to that local golden pocket. That could be your short, because this could be like left shoulder, head, right shoulder, and then you break it down. So once again, on night, you pull your Fibonacci from highs to lows between the 42 and 45 cents. This could be a short zone for you. And remember, the 45 cents, 45.3, fills that fair value gap. So let's just say you're looking for a short from that area. Stop would go above the local high. I would be targeting at least the midline down there, but you might be targeting like a real breakdown of this thing, potentially coming to grab these lows here. Shoot, we could even pull a golden pocket from this last bounce from the midline up to your highs. Okay, you're already bouncing from the golden pocket. Pulling it from this guy here, because this is when we broke out of the value area high and back tested your prior highs. Yeah, and it would be the same thing. So you see how we kind of broke out of your range, broke out, back tested those highs, and then pushed up. Now we could be looking for something very similar here, where we have kind of a range in here, kind of a sideways range in here. You broke out. Now if we come down, back test those prior highs into that golden pocket, kind of your prior highs into that golden pocket. Okay, let me check the chat. Chainlink, we'll check out Chainlink. How do you add VWAP on TradingView for Bitcoin? Well, for anyone, you just go into indicators right here and type in VWAP, volume weighted average price, and you click on that. Now, when you click, this is going to be a daily VWAP, not an anchored VWAP. Now, say you click on that. I already have it on my chart. You come into your VWAP and you go into settings here. And if it's on session VWAP, that means it's on the daily VWAP. So it snaps to price action at the market close of every day. But you want to turn off your bands as well. You see these bands are usually on here, and they give you like your deviations of the VWAP. I turn those off and I just look at the VWAP because that's the most important thing. So like coming back to Bitcoin, you can see how each day it snaps to price. Like, where was the snap? Right here. And it snapped to price. You traded for the day, snapped to price, traded for the day. And so later today, if this is lower at close and we're above it, it's going to snap up to price and then start trading with them. But just type in VWAP. To use the anchored VWAP, it's in one of these guys here. Volume and measurement tools. Let's see, where's that at? Volume-based tools, anchored VWAP right here. And you just click it from a kilo, throw it on there, and it will show you your anchored VWAP. It's showing you the volume since that low, the average price based off volume. Don't think we squeeze the shorts to the top. No, definitely no. I bought Pippin in January the day it dumped. I held it all year. I'm glad I got out at even money. Yeah, good job, Decrypto, because that thing doesn't look good to me. Virtuals. Yeah, virtuals looked pretty good, I believe it was. We were checking out. I feel like looking at BTC may be more reasonable as it dictates the entire market. Yeah, for sure, Bitcoin does. You're extremely bullish on the next low, Leovinus. Are you talking about local low for the day, or are you talking about more macro time frame? Chainlink. All right, let me check Chainlink real quickly here. Chainlink, there's not going to be much to update on. Just like Solana, we're in the range. Chainlink is just pretty much coming down. I believe it came down. So the thing about Chainlink is this does look very three-wave corrective. Three-wave corrective, kind of some 1-2s in here. We could be in a third wave down here before forming some bigger 4-5s in here. But Chainlink rejected multiple times from our golden pocket. And remember, this golden pocket at like $15 was just above our bearish backtest on the daily time frame of your pitchfork and your point of control. So for me, we had lost the pitchfork, we had lost the point of control. Three-wave corrective move to backtest it. We're rejecting. This could be a one, or actually, this would probably be a flat in here because you took those highs, and now we could be about to impulse down here. But locally, let me get this guy. I want to make sure that naked daily is still naked. No, it's not. This daily level, this golden pocket we can get rid of. I'm going to get rid of this. So we'll pull a couple golden pockets here from your range lows to your highs. Yeah, you're already losing the golden pocket. Kind of, you're chopping around it. I don't like how it wicked past it and spent some time. Yes, we are reclaiming it locally right now. But once again, it's kind of a flat range. Like this area here is your flat range in here. So what I'd be looking at is pulling the volume profile, all the price action below the POC over. I want to extend this POC as well. And let's hide the large range. Look at our smaller range here. So I would say this value area high at the back test of the pitchfork and this daily level. Let me make sure that's still fresh. Yeah, that's still a fresh daily up there. We have a daily down here. I would say this is still important. Internal liquidity grab into your daily level and into your value area high. It's also right now probably going to be your 786. Yep, 786 is right there. But because this look is more three-wave corrective, I do think we are going to continue down to take out the lows and actually hit that. The value area low was at the bottom of this box, your macro value area low, and it has shifted a little bit. Where was that? Let's see here. Yeah, that's it. Okay. So your macro value area low has shifted. Now it's at the top of the box, but coming down, wicking past it to grab the liquidity is what I would look at. No naked dailies. I believe there was a naked weekly. No. Yeah, okay. So, I mean, you're trying to hold the value area low of your local range in confluence with that golden pocket. I would watch for a bearish backtest if we can even make it up there of that POC before maybe losing this thing. So locally, you might have some upside on this, but fill in this fair value gap in here and then dump. Money flow looks pretty bearish here on the 2-hour. You did see some bull divs though, and money flow going up on the 4-hour on NAMI. So that means that this rise might give us a little bit more. Just like with Ethereum, just like with Solana, and even Bitcoin, we might, in this small kind of channel structure, we might get a little bit more of a rise. Yeah. Yep. See that channel that we're in there? Tried to wick out of it a couple times. We are trying to reclaim the value area low of our local range and our golden pocket. So that's nice at least. You're forming a triangle in here. Very squeezy. Because you pumped into it, you have a higher likelihood of pumping out of it. Just barely, though. Watch for the fake out of the triangle to take those highs and then dump. Okay, guys, I've been streaming for about 2.5 hours. Let me check the chat. By the way, I will be streaming tomorrow instead of Thursday. So tomorrow, same time tomorrow, I'll be streaming. Please come join me, 2 p.m. Eastern Standard Time. I'll be here. Appreciate all of you guys. Let's see if you're thinking about throwing. Okay. Let's just check Bitcoin one more time, and then we will. Mark Dutch, welcome in, man. Good evening to you as well. Appreciate you being here, man. It's kind of a boring day for the charts. Watch that Bitcoin chart for me. I'm making dinner and listening. Don't let me get liquidated. Right? Mark, I love, Jason says that too when he leaves. He's like, guys, I got to go real quick. Watch the charts. Don't let me get liquidated. But there's not much to watch right now. Gosh, it's boring. Oh, we still haven't checked out Bitcoin dominance. I keep forgetting about that. Yeah, as expected, Bitcoin dominance kind of pushing up a little bit. Chopping within our little range. I still think that naked weekly POC value area high, your local 786 Fibonacci, and your larger 0.5 Fibonacci, this green box, or purple box, excuse me, could be the level. We're forming more of a sideways range between value area low and POC, but now we're trying to get above that POC, and you can see we're starting to see more and more price action above the POC. So we might be about to flip it soon and work your way up to value area high. Now, I know there's a wick here, but I'm looking at the golden pocket value area low. This is where we were looking at big dominance bouncing. If you go back and watch that video from like the second week of November, before we came down there, we were looking at that. We pull it all the way to the top. Kind of in this area. Yeah, you're still kind of bouncing from that golden pocket. I mean, 1 hour looks pretty good here. You can see lower lows here, higher lows here, money flow crossing into the green, bull divs all through this, money flows crossed into the green. So I think it's likely that we're at least going to take out this high, but maybe even come up to our purple box up here. I got that joke from Jason. He's hilarious. He is hilarious, man. But so are you, Mark. Like, yeah. Jason eats without a pitchfork. I know. Come on, Jason. What's up with the no pitchforks, man? But all right, guys. Not a lot is happening here. I'll be live tomorrow. We'll check in. If you guys have any questions, tag me in the Telegram. Tag me in the Telegram. Make sure you tag me, because if you don't tag me, sometimes I miss it in that general chat. But thank you guys so much for being here. I think Bitcoin overall is going to reject and continue down. So locally, that swing failure pattern into your 786 Fibonacci below could be a nice little level. If we pull that Fibonacci from the lows of your corrective move to the highs, that 786 is resting at about 83,600. And of course, you have the liquidity at 83,800. So I know it's not the nicest, but 1, 2, 1, 2, 3 here, or even you could count this as maybe just a 1 here, because that can be counted as a 5. 1, 2, 3, 4, 5. There's your corrective move. This is all a 3, 4, and then 5. So either way, whether we count this as a double 1, 2 or a single 1, 2, this is still the highs of 3. This is still the lows of 3. And between the 382 and the 0.5 is where you're looking to reject. That 0.5 is also kind of an SR flip level. I believe we had a daily level there or something. No, we don't. Yeah. Nothing really in there besides that. All right, guys. Thank you so much. I will see you tomorrow. Oh, and CJ, welcome in, man. Honestly, for Bitcoin, I'm watching around 89,360 for rejection to continue lower. We might keep pushing up a little bit higher locally. And remember, we have that fair value gap in here to fill that fair value gap into your 0.5 Fibonacci. Fair value gap imbalance in the market right into your 0.5 Fibonacci.